we've continued to see an economy that holds up.
I don't think that we can underestimate just how important the wealth effect has been allowing this overall economy to levitate.
When we really look under the hood, we are seeing this broadening out.
We probably are going to have to go and look at our Q1 GDP forecast and boost those.
At these levels, one can expect maybe a cut or maybe none.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday following the president's primetime address.
Our nation is back. Bigger, better, richer, and stronger than ever before. Inflation is plummeting. Incomes are rising fast. An unfortunate ruling from the United States Supreme Court. It just came down. The S&P hit 7,000. Where it wasn't supposed to do it for many years. The golden age of America is upon us.
President Donald Trump defending his economic record. As Fed officials continue to get behind a prolonged pause, the market is bracing for today's blockbuster earnings report. NVIDIA coming up after the close.
And we really can focus on NVIDIA because after 107 minutes of the president's speech, we don't have that much new policy to talk about. So really, we are focused very much on NVIDIA and how high the bar is for them to really cross the threshold and beat, given the fact that they have risen, those shares, just 3.4% since the fourth quarter of last year. Why? That has been the question perennially, given the $650 billion of capital expenditure planned for this year for hyperscalers alone.
When it comes to hyperscalers, this also did make it into the president's an hour and 48-minute speech last night. He was talking about AI data centers and the demand for it and how it's going to drive electricity utility bills up. And he says, don't worry. These companies, the tech companies, were the one to help pay for that. And this gets at the heart of what the president really needed to address yesterday and didn't spend as much time in it as people thought. And you could see that in polls. Almost 7 in 10 Americans say that Trump is focusing on the wrong problems in the United States. That was an immediate poll done by CNN after the State of the Union. Americans, they don't really care, everyday Americans, all the time about the S&P 500 or the Dow Jones, where it's trading. They care about where beef prices are trading and they care about what their electricity bills are. And that is crucial for the midterm elections.
The biggest asset that party has right now is time. It is the end of February and the last 2 months have felt like a lifetime. Imagine how much longer it will take to get to November. They've got time on their side. 1, 2. The president's polling really poorly on affordability. But the real headline here is that no one is polling well. This came from the ABC Washington Post Ipsos poll. Americans are split on who they trust to better handle reducing the cost of living. Equal shares trust Trump and Democrats in Congress. That's a problem for both parties.
It's a problem when you have inflation that has climbed so much under Biden, under President Trump. It's come down in terms of the pace of price increases, but the year-over-year increase since the pandemic has been really tremendous. How do you deal with this? You say time. This is the reason why I'm surprised we didn't get policy prescriptions like capping interest rates or some of the other aspects that President Trump has floated, because they have time. But what that does is it hampers how much they can raise tariffs or potentially some of the more punitive measures that are also hallmarks of the agenda. So real question here on what they can do.
It is peculiar that we didn't hear any new policy prescriptions, and the president was really just in full-on marketing mode to come out and say, look what I have already done. But all of this is behind us. All this is already baked into the market. All of this the consumers know is coming down the pipeline. What happened to potentially a state of emergency when it comes to housing? All we heard from him is basically the same. If you're an institutional investor, you should not be buying up the housing market right now. It's not fair for everyday Americans. So that is why this is very peculiar. And when it comes to the Democrats, they came out swinging after in terms of Governor Spanberger, clearly focused on affordability.
If you are just joining us, welcome to the program. Equity futures doing okay. No real reaction to that address overnight. Equity futures positive by about 0.1%. Coming up this hour, we'll catch up with Julian, Emanuel of Evercore as investors shake off AI worries. The former senior White House trade advisor Kellyanne Shaw on the president's tariff agenda, and Angelo Zino of CFRA ahead of key earnings from NVIDIA. We begin this hour with President Trump addressing the nation.
The roaring economy is roaring like never before. One of the primary reasons for our country's stunning economic turnaround were tariffs. Mortgage rates are the lowest in 4 years and falling fast. American oil production is up by more than 600,000 barrels a day. Democrats are destroying our country, but we've stopped it just in the nick of time, didn't we?
Joining us now to discuss someone who sat through all of that, Bloomberg's Tyler Kendall. Morning, Tyler.
Hey, John, good morning. Well, domestic issues remained at the forefront of President Trump's State of the Union address last night in a bid to convince Americans the economy is in better shape than polling tells us voters feel it is. And the president really seemed to focus on touting policy achievements that have already been enacted, mainly those tax cuts under the One Big Beautiful Bill. As it becomes apparent, this White House is going to be banking on larger refunds as we head into the midterms. As you guys were already discussing, we didn't get a lot of new policy proposals, though the president did announce a plan that would help workers without employer-backed retirement savings accounts. So perhaps we'll get some more details there. But it really seemed to focus on calling on Congress to codify policy proposals that we've already heard, including the president's health care framework that seeks to shift federal subsidies from insurance companies to American consumers, and his call to ban institutional investors from buying single-family homes. The thing is, a lot of these proposals do not have the full support of Republicans in Congress. President Trump also made clear that tariffs will remain at the centerpiece of his economic agenda, going on in that speech to threaten trading partners if they pull back on any of their pre-negotiated trade agreements, as some of those Supreme Court justices that have struck down his broad-based IEEPA tariffs were sitting front and center in that chamber last night. Now, you mentioned that new Ipsos polling out earlier this week that does spell trouble for both parties, but I will mention that there is that one poll in there that 57% of U.S. adults disapprove of the president's handling of the economy, really highlighting some of those headwinds that the president was facing as he headed into last night. John, while domestic issues seem to be the theme at the urging of top White House officials for the president to stay on that message, of course, foreign policy has been dominating the conversation here in Washington. The president making some headlines when it comes to rising tensions between the U.S. and Iran, as he still has not ruled out that potential that we could see military action.
That threat still lingers. Tyler, it's good to see you. Thank you. Tyler Kendall down in Washington, D.C. Quick programming note, 8:30 Eastern Time. Look out for this. USTR Ambassador Jamieson Greer joining the programme to break down just where we are with tariffs right now.
Well, right now we're at a 10% tariff level, even though the president did truth that it's going to be 15%. There's no directive yet for that. So it's at 10%. And I think we just want clarity right now from Ambassador Greer.
That conversation a few hours away. Here's a view on Wall Street this morning. Julian and Emanuel of Evercore writing, the president's speech last night celebrated American values, intensified the partisan divide in Washington and maintained the uncertainty around the situation with Iran. Julian joins us now for more. Julian, good morning.
Good morning.
I read your recent note. Despite valuations, despite geopolitical anxiety, despite the political anxiety, despite a series of blow-ups, the index has been really, really resilient. What does that tell you?
It tells us that, you know, the backdrop, the macro backdrop in a year where we're getting better earnings growth, it's likely going to be double digits when all is said and done in 2026. Long-term yields staying very, very, sedate, particularly when you think about the rest of the world. Stimulus and the potential for rate cuts. It says that stocks are likely going higher.
Now that we've passed the State of the Union, is NVIDIA the big event of this week? I mean, how big of a market-moving event is this going to be?
It's very big. What's fascinating to us is, we're comfortable being contrarians. And when we came into 2026, we felt that, being overweight the AI-centric names and themes was really in consensus. And that changed very quickly. The mood around technology remains very guarded. The positioning remains very light, frankly, and a lot of that has to do with the buildup around Iran. And so, look, we know that the report today will be good. They will beat on the metrics. It's just a question of how the shares will respond. And frankly, the market is poised for likely a good share price response.
So I wonder if what's good for NVIDIA is bad for everything else. We've seen this rotation through the rest of the economy at a time when there's a lot of anxiety about the labor market, where you're seeing those pressures. We got Home Depot yesterday, we got Lowe's this morning, raising the specter of uncertainty, really pressuring consumers. At what point is NVIDIA a counter indicator to the economic cycle? And could their earnings reverse some of the broadening out that we've seen?
Look, and again, think about the backdrop that we've had. The leading sectors this year, energy, industrials, the deep cyclicals, but also consumer staples. So in terms of the action and the interpretation of earnings, all is well, except, you've had these occasional blow-ups. But in our mind, if anything, NVIDIA is likely to, and remember, the public hasn't really soured on technology because the labor market, as difficult as it is to actually fathom with all the policy changes of the last year, is still relatively strong. And that bodes well, really, across the S&P 500.
You mentioned Iran. The president spent a lot of time last night talking about this. Do you think that this is going to be potentially the next catalyst for the market?
There's no question about it. And what's interesting is you know, sometimes there's an eye roll when we talk about options, but actually the options market is telling you right now that investors are very hedged for a more challenging outcome in Iran. You look at the prediction markets, they think something's going to happen. Well, I've got news for you. The skew, the price of downside puts versus upside calls in the triple Qs is as wide as it was during the trough of the April tariff tantrum. And so very contrarian, and the same thing in terms of bullishness in the oil market, as bullish as it was when oil was $120 a barrel when Russia invaded Ukraine initially.
So the market is screaming military intervention, not diplomatic off-ramp.
That's right. And so for us, the surprise, I mean, our base case is we think there will be some either off-ramp or limited military engagement. Because think about it. We heard it last night. We hear it all the time. If the oil price spikes further, you are losing the war on the affordability issue, and that means you're going to lose the midterms. So that's really, you know, a least desired outcome.
The good news so far is that rates have behaved, that we've got 10-year bond yields back down to 4%. What's the signal an equity guy like you takes from the move that we've seen in fixed income?
Well, it's this dual-edged, you know, thought that the violence under the surface. You've had crashes in software. You've had crashes in silver. You've had crashes in alt investment managers. That the message from all of this is that the credit market is disturbed and maybe we're having a growth scare. But frankly, if you look at the broad credit market, it still behaves very nicely, even though there's pockets of distress.
Julian, it's good to see you. You're going to stick with us. Julian Emanuel there of Evercore. Yields this morning higher by just a few basis points. The 10-year at the moment, 4.05%. Looking at the broader bond market at the front end of the curve, twos up by 2 basis points to 347. Let's give an update on stories worldwide this morning with your Bloomberg Brief. Let's catch up with Yahira for more. Hey, Yahira.
Hi, John. President Donald Trump delivering a record 1 hour and 47-minute State of the Union address last night. The speech was heavy on his economic policy, with the president touting falling food and gasoline prices. Trump didn't offer many new policy proposals, though he did promise a $1,000 retirement savings match for workers without 401ks. Virginia Governor Abigail Spanberger delivering the Democratic response to the State of the Union, asking viewers whether they felt the president was addressing their core needs. Spanberger arguing he is not, pointing to Trump's efforts to implement global tariffs, federal immigration agents killing American citizens, and escalating tensions with Iran, Russia, and China. And we are seeing shares of Lowe's falling 3.5% in the pre-market. The company reporting fourth quarter earnings that beat estimates. Its full year adjusted EPS guidance, however, falling short of forecasts. Lowe's CEO saying, quote, while the housing macro remains pressured, we are focused on directing what is in our control. That's Bloomberg Brief. John.
Yahira, thank you. Appreciate the update. More from Yahira later this hour. Up next on the program, selling Americans on the economy.
Inflation is plummeting. Incomes are rising fast. Mortgage rates are the lowest in 4 years.
We did not hear the truth from our president. Everyday Americans are paying the price.
Up next, we'll catch up with Adam Posen of the Peterson Institute from New York City this morning. Good morning. It's the schedule today. Later on this morning, earnings from TJX should get them in the next hour or so. Later on this afternoon, numbers from NVIDIA. Don't forget Salesforce either. That one in the mix, disrupted by the AI fears. That stock has been kicked about quite a lot over the past few weeks. More on that a little bit later in the programme. Equity futures on the S&P doing OK, positive by 0.1% on the S&P. On the Nasdaq, up by 0.2. Some outperformance on the Russell, small caps higher by 0.4. Under surveillance this morning, selling Americans on the economy.
Inflation is plummeting. Incomes are rising fast. Mortgage rates are the lowest in 4 years. Beef, which was very high, is starting to come down significantly. Just hold on a little while. We're getting it down.
We did not hear the truth from our president. His reckless trade policies have forced American families to pay more than $1,700 each in tariff costs. Everyday Americans are paying the price.
So here's the latest this morning. President Trump defending his economic record in a marathon State of the Union. According to a recent poll from Ipsos, Americans are split on who can better handle the cost of living crisis, including 33% who say they trust neither Trump nor congressional Democrats. Joining us now to discuss is Adam Posen of the Peterson Institute. Adam, a warm welcome back to the programme, as always, sir. Are affordability issues set to get worse and not better in the year ahead?
I think they are, John. Thanks for having me back. And I feel the first time in my life, I feel a little bit of sympathy for Donald Trump because there's just not that much he can do on affordability. He would have to try to intervene directly into particular markets that matter, like housing or food, which he's not averse to doing, but even the Congress is not willing to do. And it's not clear those would be more than for show. And I think there remains a tailwind to prices because the labor market's a lot stronger than people think, because the Fed is not as tight as people think, because of the tariffs. And in the background, the migration issue is starting to hit. The other point, though, is, as Lisa and Annmarie and everybody said, he didn't make any major budget proposals. He didn't make any major policy proposals of any kind. And so against my prior forecast that there was going to be a handout, maybe inflation will be a little lower than I feared because he's not going to blow out the budget quite as much.
But Adam, couldn't he do something when it comes to affordability, when it comes to tariffs specifically? Just let the Supreme Court's ruling stand and don't now have new deals of 10 or 15% with 122s.
No, you're right, Annmarie. I didn't mention that because it's something he's clearly not willing to do. He could take down tariffs unilaterally, and since basically every ally we trade with, including Canada, including Europe, including Japan, including Korea, has lower tariffs on us now than we have on them. And as Governor Spanberger pointed out, none of the things he claimed about manufacturing or jobs or trade deficits were true. Some of the things he said were true, but those weren't. And so, yeah, he could reduce prices, but even that would be a great idea, and it'd be good for the country and good for the average working American, but it wouldn't necessarily translate into price drops. So as all of you have been saying, a decline in the rate of inflation isn't the same as seeing prices for things people spend on declining. You need real income growth for that.
Adam, the one thing that struck me as a potential market-moving influence was his discussion of tariffs as reshaping the way we pay income taxes. In other words, no income taxes and increased tariffs to account for the bulk of all income for the nation. He went on to say, as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, talking about the late 1700s, 1800s, substantially replace the modern-day system of income tax. Is there anything that you take from that that could be codified? Do you see that as a feasible path forward?
It's not feasible, Lisa. I mean, it's just wrong. When the U.S. government was running on taxes, just like some sub-Saharan African and Central American countries today have tariffs, that's a big part of their tax revenue. It's because they can't collect taxes in a more efficient way. All they've got are troops at the border, and because the society and the economies are not very well developed, a tariff system doesn't work. It also isn't paid for by the foreign countries, no matter how many times the president says that, no matter how many times his people try to attack research. It's universally recognized. It's just right there in the data. Now, how much of that's the consumer versus companies is a question. How much that becomes inflation is a question. But there's absolutely no question. It is the American purchasers of the inputs and of the products who pay the tariffs. But finally, even with the Supreme Court ruling tariff revenues are going to go down because if tariffs stay up, then people change behavior. They start buying more American products, or they start foregoing foreign products, or they start substituting in ways that are not good, or over time you bring some stuff home even though it's less competitive. And so what happens is you end up spending less on foreign goods. Now, that's not a good thing. But and from a revenue point of view, it's definitely not a good thing. Because then if you're spending less on foreign goods, there's less tariffs. And so my view is we're already well past peak tariff revenues, even if the president were to let them lapse.
Adam, just a final question, just to go back to the summer of 2024. You warned ahead of that election, given the policies that were being proposed, that this Federal Reserve might have to prepare the market and the country for higher interest rates. They cut interest rates subsequently in the year ahead. Adam, given where things stand and your revision to your outlook on inflation, where are you now on Fed policy?
John, thanks for asking. If it turns out that the president doesn't put in a budget request for bailouts and handouts to people ahead of the midterm elections, I'll be surprised. But then I have to reduce my inflation forecast from 4% to 3.5 or less on CPI at the end of the year. But I also think that the Fed, as a large number of FOMC members have indicated over the last several weeks, the Fed is not going forward with an easing bias. They should not be going forward with an easing bias. The labor market is much stronger than people think. The pain is real for people, but that's different from us saying that there's a cyclical weakness in the labor market. You have to separate those two things. And in that situation, and as your guest Emanuel mentioned, credit markets are holding up pretty darn well, and credit remains pretty available. So I don't think the Fed's going to be cutting as many times this year, even before we get into the independence politics, as markets currently project.
Adam, it's always good to see you. Thank you, sir. Thanks for your time. Adam Posen there of the Peterson Institute. Julian Emanuel of Evercore still with us. Julian, let's talk about the consumer and how that's been priced in the equity market. We've got discretionary down by close to 4% for the year so far. Staples up 15%. Is there an economic story in there, or is that all AI?
It is very largely AI, frankly. And if you think about it, so when we did our foundational work on AI, we really digested what the job impact would be across sectors. And actually, when thinking about it, right, the least impacted sectors, metals and mining, agriculture, consumer staples, all of the sectors that have ripped year to date. The most impacted sectors, financials, software, the legal profession, all of the places where you've seen tape bombs on and off. And so, you know, to us, this is also typical behavior that you get in the first quarter of the new year, that kind of rotation. But there isn't really, in our mind, a broader message here.
Financials and the banks were a consensus overweight into the new year. Has that changed for the year ahead for you?
We've had it an inline rating. Look, they have been expensive. They remain expensive. And obviously, again, you know, while we don't see anything systemic, this is an environment where we're shooting first and asking questions later. We'd rather not be in areas where there's going to be more shooting.
Julian, it's good to see you. Thank you, sir. Julian Emanuel there of Evercore on the equity market and the financials. A consensus overweight for many of you coming into the new year. And that sector's been beaten up. I think one day, one session in the last week, the worst session we've seen going back to April of last year.
Yeah, because they could ostensibly be subject to a report saying that actually Anthropic came out with a financial planning tool that eradicated the need for the big three banks in the United States. And so people want to get away from that because evidently the firing range is not an attractive place to be.
And the shooting hasn't stopped
Evidently.
just yet. Yeah, clearly. Equity futures on the S&P at the moment positive by a few tenths of 1% on the S&P 500. Up next, we'll catch up with the former senior White House trade advisor Kellyanne Shaw as President Trump looks to push his tariff agenda, plus your higher drops by. She's got your morning movers. Workday shares falling, adding more fuel to the AI concerns. That stock is down in the pre-market by close to 10%. Some big moves at a single name level. The index stood around 2% from all-time highs. From New York City, you're watching Bloomberg TV. The S&P continuing to chop at the index level, still within 2% of all-time highs. Futures this morning up another 0.2% on the S&P. On the Nasdaq up by 0.2, also up by 0.4 on the Russell. Chop from Monday through Tuesday. Staples leading on Monday, discretionary leading on Tuesday, and here we are so far this Wednesday morning. Things could change quickly, as you all know. In the bond market, 2s, 10s, 30s shaping up as follows. 10s still around 4%, 4.05. Yields up by 2 basis points at the long end of the curve on 10s and 30s. Take a note of what's happening in Japan. The new Prime Minister selecting some very, very dovish policymakers for the board at the BOJ, may be pushing them to not hike interest rates in the face of increased government spending.
Yeah, this was the reason why yesterday you saw the yen really lose ground and people start to wonder, okay, we're going to reignite the sort of steepening yield curve trade based on Japan. Today, the appointment of 2 reflationary members to the Bank of Japan's board. So even though Takaichi was thought to be non-interventionist, maybe that narrative is changing just a bit on the margins.
Yeah, it's funny to me that everyone freaks out about what's happening in America, about the prospect of Treasury working more closely with the Federal Reserve. You're seeing it play out right now in Japan. It's happening. There's your case study, real time.
And it's great for equities. That's the amazing thing, because if you look at Japanese equities and if you talk to any investment manager, they were eager to go over into Japan. So it's a vote of confidence, at least on one hand. Then you look at the bond market, you say, shh, maybe don't show that to me.
Yeah, bonds down, yields up. The Nikkei still rallying. 3 hours away from the opening bell, the cash open just around the corner. Let's get you some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Low signaling the housing market isn't improving anytime soon. Shares are falling 3% in the pre-market after the home improvement chain gave a weaker than expected full-year sales outlook, echoing the issues we heard from Home Depot that customers just aren't taking on big projects due to all the uncertainty in the housing market. The Home Depot shares did end the day up 2% yesterday after its comparable sales beat. Meanwhile, I never thought I'd be watching a Workday earnings report so closely, but here we are given the environment. Workday stock had been down 40% year to date heading into earnings on concerns that AI will disrupt enterprise software demand. And the outlook and the softer outlook it gave is only adding to that anxiety. The CEO did try and calm fears, saying that Anthropic, OpenAI, and Google all use Workday, but those comments not enough to ease fears. Shares are down more than 10% in the pre-market. And we are also seeing HP down 5.5% in the pre-market after warning its profits will likely land at the low end of its forecast. The company is seeing strong demand for its AI PCs, but that momentum is being offset by higher memory costs and tariff headwinds, echoing what we heard from the likes of Dell and Cisco, warning that the big memory crunch will eat into margins. John?
Yahira, thank you. Thanks for the update. More from Yahira a little bit later this hour. On our radar this morning, President Donald Trump pushing hyperscalers to cover energy costs for data centers.
We're telling the major tech companies that they have the obligation to provide for their own power needs. They can build their own power plants as part of their factory so that no one's prices will go up. And in many cases, prices of electricity will go down for the community.
The administration reportedly in talks with companies including Microsoft and Alphabet about signing pledges. Elsewhere, Warner Brothers Discovery saying a new offer from Paramount Skydance could top its current deal with Netflix. The buyout offer, worth $31 a share, is enough to bring both sides back to the table, and a final winner has been declared. And finally, a massive $112 billion gap in trade data suggesting China may be dodging US tariffs on a record scale. American manufacturers warning this, quote, tariff cheating is an existential threat.
Because ultimately, if you're being charged those tariffs and your competitors aren't, well, guess what? You're at a competitive disadvantage at the same time that you could potentially be legally liable. That $112 billion gap between what China reported as well as what the U.S. and U.S. Customs said came into this country highlights just how important it is to really get a handle on this. The Federal Reserve actually at the time did research that showed about 2/3 of that came from evasion of these tariffs. So again, it goes back to this issue of how do you deal with revenues that are a bit more slippery and given some of the competitive landscape in the United States.
And the gap is getting bigger because the steeper the tariff rates, the more cheating that is going to fuel. And that's what we see. Too bad the president didn't have a moment to address China directly, head on.
Wasn't that strange?
And talk about the cheating that is going on and the state subsidies that China gives to their companies and all the concerns that you have in Washington in bipartisan fashion when it comes to Beijing. He didn't address China head on once.
Why do you think that is?
I think it's because he's going there in April and he doesn't want to rock the boat. And he's probably trying to get some things done. And they're dealing with tariff rates right now, given the Supreme Court struck down IEEPA. But this is a president that many voted for him, frankly, because of the rhetoric. When he first started campaigning, when he came down that escalator just a few blocks from here, and now he didn't address China head on. Very strange.
That meeting in China just a few months away. Let's turn back to that State of the Union. President Trump remaining defiant that his tariff agenda will continue despite the Supreme Court's ruling.
They're a little more complex, but they're actually probably better. Congressional action will not be necessary. It's already time-tested and approved. And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax.
Former senior White House trade advisor Kellyanne Shaw writing the following: it may not be a straight cut and paste, but I expect at least some tariffs to increase to 15% in the coming days. Kellyanne joins us now for more. Kellyanne, welcome to the programme. Help us understand where we are. It was 10, then over the weekend it was 15, and then we came into the week and it's 10. What is it, and what's it going to be?
Well, right now it's a hurry up and wait. So it's technically a 10% tariff that went into effect at 12:01 a.m. yesterday. But I do understand from the administration that they are still looking to implement the president's 15% tariff increase. Part of the challenge is that Section 122, it's a really wonky statute. It's never been used. It does allow you to carve some countries out. It allows you to carve out some goods. It's not really clear that it allows you to differentiate between countries in terms of the overall tariff rate. So once you get to 15, you're actually increasing tariffs above some of these agreed trade agreements. And you're also putting tariffs on countries like Australia, the UK, and a lot of Western Hem countries. So it's a little more complicated to work out legally. I think that's part of the delay, but I'm still expecting that 15% tariff increase.
So if the rate is higher than what this administration has agreed to with some trading partners, and they want trading partners to abide by those agreements, are we going to get carve-outs?
So I've actually talked to some of our trading partners about this, and some of them are a little concerned that they're going to end up with a tariff rate that's above the agreed rate, and they're talking to the administration about that. So I think the administration is going to look for some flexibilities in terms of whatever proclamation comes out next. But they're going to have to do so within legal constraints. They just had IEEPA tariffs struck down. They're going to be really conscious of not wanting to have these ones enjoined or struck down too.
Well, are 122s legal? They have never been used either in the past.
Well, it's certainly a law on the books. And if you look at the CIT decision that initially struck down the tariffs, one of the bases was because the court thought that the president should have used 122 in the first place. So there's certainly scope to use Section 122. It's just really a matter of how you implement it. And I think that's really what the administration's wanting to make sure they're doing, to make sure that these tariffs don't get struck down again.
There was a tension yesterday, Kellyanne, between this focus on affordability and this focus on tariffs, and trying to explain how tariffs are actually structurally going to be better longer term because it could potentially reduce income taxes and other aspects that consumers pay. I just wonder how hampered the president is from increasing either the 122s to 15% or implementing some of the others based on the affordability aspects of his agenda.
Yeah, I think it's a great question. I mean, really what's going on here is the administration looks at the data, they look at the tariffs, and they say that, look, we haven't seen significant price increases on the backs of some of these, in some cases, really high tariff rates. We haven't seen some of the economic catastrophes that everyone predicted would happen if the administration put in a universal baseline tariff. And so this idea that tariffs are leading to this affordability crisis doesn't really register, but it does register in the minds of voters. And you have a situation in which voters are linking tariff increases to price increases and to the fact that they're having trouble affording grocery store, energy prices, and a lot of things that voters will vote on in terms of how they're feeling about the economy. And so the administration has some work to do in terms of trying to message this to the American people going into the midterms. But I don't see the administration significantly pivoting. You heard the president doubling down last night that tariffs were a core part of his economic policy. We might see some tinkering on the margins, but I don't expect a full-scale reversal of any of this policy.
There's also a question of what the IEEPA ruling by the Supreme Court does to international agreements with some of our trade partners, given that certainly the European Union has already pushed back. We're going to be speaking with Ambassador Jamieson Greer, the trade representative for the United States, later this morning. I'm just wondering what you're wondering about, what your biggest questions are for him.
Yeah, and certainly seeing the EU hit pause on its consideration of that implementing legislation was predictable. I think the EU in some cases has been looking for a reason to kind of walk away from this deal for some time. The U.S. implemented back in August. The EU hasn't cut a single tariff line since that Turnberry agreement. So this isn't a surprise, but I do expect that to escalate. I think in terms of what to ask Ambassador Greer, I'm curious about when we'll see some of these Section 301 investigations, what the tariff structure might look like, whether it's going to cover all trading partners or just some trading partners, really trying to get a sense of what the next 5 to 6 months look like as companies are trying to navigate this new tariff landscape.
Let's talk about the next 2 months. So Annmarie mentioned that meeting in China between the president and the Chinese leader. Kellyanne, do you sense that he's lost some leverage here, given how constrained he might be now at home? And the point that over the last year that China has run a record trade surplus even with these tariffs?
Yeah, I think it's a good question as well, especially going into the President Trump, President Xi visit. But I guess my big takeaway is long term, the United States already has tariff leverage over China. They're doing all of these 301 investigations to get more tariff authority over other countries, but we have that existing 301. We also have an ongoing 301 investigation into China's compliance with the Phase 1 deal. And there's a host of other levers the United States has, from financial tools to export controls and other mechanisms to really get leverage over China going into some of these discussions. I think my base case for an outcome is pretty low to begin with. I think the administration is really looking to just keep a stable relationship between President Trump and President Xi and the trade arrangement that they negotiated in Busan. Not expecting any massive deliverables there. So I think it's a pretty steady state with China, remarkably. But it is a good question as to what some of this means in terms of the president's negotiations with other trading partners, where it's not as clear what tariff authority he has to threaten some of these big foreign policy related tariffs.
Kellyanne, we have tariffs on them, but do we have influence? Do you sense we still have influence?
I do, but I do think the next few days are a bit rocky until we do get some more certainty over what the president's tariff agenda is going to look like, the authorities that he's going to use. I think the relationships with most of our trading partners will be stabilized. You know, when it comes to the U.S.-China relationship, there's a lot of soft power at play, and I think that's what you're alluding to. And certainly having a court decision which goes against one of the president's key policies isn't the best thing going into this meeting, but at the same time, I don't think it's devastating. And I think there's a really long time between now and March 30th when the president goes in terms of actions that can be taken. That's a lifetime in terms of the trade agenda and the negotiating agenda. So we'll see what happens in the next couple of weeks.
Hey, Kellyanne, good to see you. Thank you. The former senior White House trade advisor, Kellyanne Shaw, on the latest with trade, a record surplus with the rest of the world, even with these massive tariffs from the US on China.
And there's this extra added wrinkle with the German chancellor over in China speaking with Xi Jinping right now after meetings with other world leaders, how much influence China's courting with other former erstwhile allies of the United States.
And the other problem this administration has, which we haven't seen the data on, is how much China is going through other nations that then have boosted exports into the United States, this idea of transshipment.
Yep.
We need to see the data on that, because China is still importing to the United States, maybe just not under the Chinese flag.
Futures this morning, positive by 0.2% on the S&P, just grinding higher. Let's give you an update on stories worldwide with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. In his State of the Union address, President Donald Trump praising the operation of Venezuela that captured former President Nicolas Maduro. The president saying the U.S. has received more than 80 million barrels of oil from Venezuela in the last month. He also awarded the Congressional Medal of Honor to one of the helicopter pilots involved in the raid. UBS upping its warning about private credit default rates. Strategists saying default rates could surge as high as 15% if AI triggers a, quote, aggressive disruption among corporate borrowers. UBS's initial report less than a month ago warned of a 13% default rate. And HSBC shares touching an all-time high in London trading, the company reporting earnings that beat estimates and raised some targets, signaling a sweeping overhaul of Europe's largest lender by its CEO, George O'Hallery, is paying off. The results boosted the company's bonus pool by about 10%. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. Up next on the program, NVIDIA, challenging the market.
There has never really been a moment in the last 3 years where the market got it, except for maybe that one big blowout report with NVIDIA. NVIDIA continues to challenge what is possible with compute.
Up next, we'll catch up with Angelo Zino of CFRA from New York City. You're watching Bloomberg TV. Got some bad news for you. The snow is falling again in New York City.
Oh, come on.
Apparently we're getting another inch. You think this is good news?
No, this is fake news.
Yeah, I didn't know this was happening.
Yeah, no, I can't see it, so it's not happening.
Another inch of this apparently, and then we're going to move on until next week apparently. So yeah, okay, enjoy that. Equity futures on the S&P. I'm not enjoying it at all. Positive by 0.25% on the Nasdaq, up by a third. One single name for you, Diageo in London trading, the drinks maker. This is where the stock is, down 8%. Dave Lewis, the CEO, saying that consumers are facing significant spending squeezes, particularly weakness coming out of the US. Now, that's interesting. Is it about consumer weakness or is it just about drinking? Because earlier on this morning, this note dropped from Bank of America. Dry January peaks while dry December is gaining traction. Even though December always brings a jump in alcohol buying, those spikes have been shrinking for 3 years straight.
Young people are not drinking. I mean, they might be smoking other things, but they're not drinking as much. And you see this in Anheuser-Busch, and you see this in other potential earnings. And so that might be weighing on their results, but might not speak to the consumer. I mean, this actually isn't totally negative. I mean, if you think about it, it's,
maybe not negative for society, negative for Diageo and their shareholders. Gallup over the summer actually did some polling around this. The percentage of U.S. adults who say they consume alcohol has fallen to 54%, lowest by 1 percentage point in their nearly 90-year trend. Americans are just not drinking as much. They're going to the gym. They're having mocktails.
Some people also think it's negative for society. Some people do believe that. Diageo is down by about 8% in London trading. I'm not one of them, but some
Tom
people...
Keane?
TK might say it's bad for society. Diageo down in London trading by about 8%. Those earnings out earlier on this morning. The big report coming out a little bit later on this afternoon. Under surveillance this morning, NVIDIA challenging the market.
There has never really been a moment in the last 3 years where the market got it, except for maybe that one big blowout report with NVIDIA. What they're missing now is that the way these GPU generations work is that they ship in volume production, which means this strong quarter we saw is likely to continue to flow. That momentum is likely to continue. NVIDIA continues to challenge what is possible with compute.
So here's the latest this morning. Traders eagerly awaiting results from NVIDIA after the market close. Angelo Zino of CFRA lowering his price target on the tech giant and writing the following. AI monetization will need to ensure supply does not catch up, as this remains the biggest risk to the AI build-out. Angelo joins us now for more. Angelo, welcome to the show. Let's just start with base case expectations for you and the team a little bit later this afternoon.
Yeah, so thanks for having me, John. I'd say overall, we expect another beat and raise quite simply from NVIDIA here. I mean, that really shouldn't be the surprise. That really should be the base case after what we just saw across Q4 earnings season from the hyperscalers. Essentially, all these companies stepped up CapEx well above expectations, essentially wiping out most of their free cash flow here in 2026, and we think they're going to do that again in 2027. Again, that would be our base case. So we're looking for revenue growth this quarter north of 65%, another north of 60% growth here expected for the April quarter. And, I'd say if there's any sort of potential risk out there, it might be on the margin side. We're looking for gross margins to expand to about 75% here this quarter. We think that's going to be okay. The street's looking closer to about 76% for the April quarter. Again, maybe it might be slightly below that, but nonetheless, I mean, the trajectory is still very good. We think they sustain a mid-70s gross margin there on top of the elevated growth rates that you're going to see here throughout the year.
A lot of companies would be very jealous of mid-70s gross margins if they take a look at some of this. You talk about what a lot of people in markets are talking about right now, which is the potential for an AI bubble. And you still see that as actually a feasible possibility in the next 3 years, but still remain heavily overweight NVIDIA. Can you explain why?
Yeah, I mean, I think the market is going to, I think unlike other cycles where you kind of saw multiples really expand on, very healthy growth rates and continue to expand as you get towards the peak of a cycle, which then led to that bubble and deflating of the bubble or popping of the bubble. I think what you're actually going to see in this cycle is it seems like investors are so freaked out about a potential top of this AI cycle that they're doing a lot of the hard work right now. They're essentially digesting, compressing the multiples as we look forward and move forward in future years. And that in many respects is a very healthy thing, right? In many respects, if you're an investor, as the cycle gets longer in the tooth, you should be essentially willing to pay less or a lower multiple as you get closer to that peak. And that's essentially what you're seeing happening on the chip side of things, on the infrastructure side of things. Again, the earnings growth will be there this year. It will be there in 2027. The stock price appreciation won't follow that to that degree, but nonetheless, we do expect a positive upside in terms of the share price performance, given the robust growth that you see. I'll also say this as far as kind of the AI ecosystem is concerned. The fact that we're essentially pulling up 2 years worth of growth in terms of this AI spend from the hyperscalers essentially means that there's going to be a lot more capacity in the market here as we approach the second half of the year. That'll allow the OpenAIs, Anthropics of the world to continue to roll out new offerings. And that's a big reason why you are seeing, clearly the troubles on the software and services side of things.
Will markets reward NVIDIA for investing more in OpenAI and say maybe even Anthropic?
Yeah, I mean, I think, we'll kind of see how this all plays out. But, I think really the unknown here in the market, right, is we know what the supply growth is going to look like. And I think, the bears out there are really focused on the fact that the supply growth may get too heavy at some point in time and really start to exceed that demand landscape. And that's entirely possible. The fact of the matter is we just don't know what that demand landscape is going to look like, what that trajectory is going to look like as we go into the second half and into 2027. I think the enterprise AI applications are going to show up increasingly from the OpenAIs, Anthropics of the world. But I think we also need to take a close look at how this physical AI world really evolves here as the year progresses and into 2027. It's something you're going to hear Jensen really increasingly talk about, something he has been over the last couple of quarters, but I think more so as we go into the GTC event next month.
Angelo, good to see you. Thanks for updating us. Angelo Zino there of CFRA on NVIDIA. Their stock is firmer in the pre-market, up for the previous 3 days, I believe, on that particular stock. Fact of the matter is that we're starting to see signs of AI monetization. CapEx is up, monetization is up, and this stock is range-bound. What gives? It's the question we've asked repeatedly over the past few weeks.
And Angelo's response is people are taking down their multiples for future years because ultimately there will be potentially a bubble that pops and people don't want to be exposed to it. Does that make the bar that much lower for NVIDIA heading into these earnings?
Up next on the programme, we'll catch up with Kate Moore of Citi Wealth, Henrietta Treyz of Veda Partners, Neil Dutta of Renmac, and the Port of Los Angeles Executive Director Gene Seroka from New York City. The second hour of Bloomberg Surveillance just around the corner.
There are elements of disruption that are permeating the entire technology sector.
Diversification is your best friend.
There will be some defensive posturing in the market.
Investors are recognizing they can go into bonds. It is the counterbalance to risk.
Regime change looks a lot like a counter-trend rally at the start.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Futures positive by a third of 1% on the S&P, up by a third also on the Nasdaq. In the bond market, all is quiet, at least for the moment, on 2s, 10s and 30s. 10s up by about a basis point or two, 4.05, still very close to the lows of the year. On the earnings front, things won't be quiet. Later this hour, we should hear from TJX. After the close, you should hear from Salesforce and Nvidia. Nvidia, the main event, of course, which should be a major CapEx beneficiary. Salesforce, kicked around by the AI disruption fears. And TJX, this is the one for me in retail. On an 18-year winning run, that stock has captured the hearts of many. A consumer.
Which is really because of their discount nature, and people are looking for bargains as they become, what is it, choosier? What word? Choiceful. Oh, yes, you love that word. Yes, I like to use language that you love. I mean, honestly, this to me is going to be a big question, especially because we are seeing select industries affected differently by consumer discretion and how people are pulling back. Do you see TJX mint money once again, even as Home Depot and Lowe's express concerns about uncertainty? And does that really add to the complications of this picture? Is the consumer strong or not? They might not feel good. And frankly, even as they feel a little bit better, their spending, has it been okay or not? I mean, honestly, the number of notes that I have that are going in on either side of this, absolutely off the charts.
Which is why it was so interesting yesterday, the president, when he was talking about affordability, a lot of individuals felt like he didn't meet Americans where they are. They are still going out and spending. We have seen somewhat of a resilient consumer, and I think TJX will point to how much they are going out and spending. But it was peculiar last night that he didn't talk about more prescriptions to this issue ahead of the midterm elections.
What happened to the report that came out yesterday afternoon?
I don't know.
I've heard barely anything about it.
Maybe
in the
it was
last
a trial
12 hours or something. This came from a report. The president had a lunch with a few news anchors, and this came out of the lunch, that the president's planning to outline an unconventional idea for personal and corporate tax cuts, which he could implement without Congress, and we got no further details. And then heard absolutely nothing about it in the address.
I don't know. Maybe you had the Senate Majority Leader John Thune or Speaker Johnson call and say, actually, you can't do that. But I think the Supreme Court maybe just told you a lot of the power of the purse still relies in Congress. I don't know. Or it was just a trial balloon.
There was, however, a nod to this idea that tariffs could supplement or replace the income taxes that people have, pointing to further tax cuts ahead. It sort of goes to a question of how well vetted this particular speech was and whether it ended up so well vetted that we got nothing there, which is the reason why markets are moving on and looking toward Nvidia.
So Adam Posen at the Peterson Institute was on the program with us about an hour ago. And this is the point he made as well, that we didn't see the additional policy proposal that I think many people expected that would disrupt the bond market and maybe get people to revise up their inflation forecast. In fact, you heard from Adam, who's had to bring his back down. Is that the story of the next 6-9 months? Because that would be unexpected.
It would be unexpected, and it would have the fingerprints of Treasury Secretary Scott Bessent all over them. Again, who is vetting this speech? Because we all were surprised that there weren't more populist kinds of prescriptions in this speech. There wasn't a 10% cap on any kind of interest rate by investment banks, and there wasn't any further discussion about tax cuts. And that, I think, is a story, and the reason why you're seeing such complacency right now in the bond market.
If we were surprised, the bond market was not surprised. Looking right through those reports yesterday, unmoved and essentially unmoved this morning, up by a basis point or two, and still very close to the lows of the year. Coming up on the programme, we'll catch up with Kate Moore of Citi Wealth as equities look for a second day of gains. Henrietta Treyz of Veda Partners as the president takes a victory lap, and Neil Dutta of Renmac as the president pushes for lower inflation rates. We begin this hour with stocks pushing higher. Kate Moore of Citi Wealth writing easier monetary and fiscal policy, resilient corporate profits and strong balance sheet support cyclically strong nominal growth. Kate joins us now for more. Kate, welcome to the programme. It supports nominal growth. Will it support this equity market at the index level?
Well, I mean, Jonathan, we've had this massive disconnect throughout the course of 2026, which feels like a much longer year than just 2 months so far, between what's going on in terms of earnings and the fundamentals and then what's been happening in price action. We've seen this disconnect across a variety of different sectors, whether it's around technology or energy. And so I'm not sure the market is actually reflecting the strong nominal growth environment that we feel we're experiencing. In fact, it's not really reflecting the strong earnings side and seems to be much more about this rebalancing, reshifting, and multiple expansion for sectors that have been laggards.
Well, Kate, do you think there is a valuation reset in both directions taking place that could linger through the rest of the year?
I don't think it's going to linger, John. I think we're actually going to get to a place where people are going to be really focused once again on the fundamentals. When we get these periods, and they often happen in the first quarter, you know this very well, we start off the year and people look for the laggards and say the valuation discount or premium needs to close. And they rebalance perhaps their sector or their country exposures. It doesn't tend to persist because you have to eventually go where the earnings are. And look, when you look at technology and communications, people are tired of the story. They're worried about where the disruption is going to be. They're kind of exhausted from the outperformance of these sectors. But that doesn't mean that's not where the earnings are. And I think we're going to have more of a recognition of that in the second quarter, even as this rotation and this multiple reshift over the course of the first quarter really exhausts investors.
Kate, we've seen earnings that haven't necessarily ignited the responses, that sort of positive flow back into U.S. equities. We've gotten that already, and it's been sort of a conundrum. Will NVIDIA kick off a shift back into some of the mega cap names that are delivering 76% margins, as we just heard from Angelo Zino?
Yeah, I would love to think that one company can inspire a whole shift back into kind of U.S. equities, but I'm not sure that's going to be it, Lisa, to be honest. I think many people have very high expectations for NVIDIA after the close today. And it's not just the expectations that were sort of published, but as you well know, it's the whisper number and the discussion that the investment community has around how high or how much higher than the estimates they'll end up reporting and then guiding. But I do think it's critically important to keep people invested at this point, because as we've been talking about for the course of the last few weeks, there are a lot of things on investor minds, right? There's concern around, impact of stickier inflation, even if perhaps some of these shifts in tariffs won't lead to as high inflation as some people had feared in 2026. There's concerns around, slowing of consumer demand, which of course has been a theme we've been talking about for what feels like 7 quarters at this point. There are concerns around geopolitical impact on activity. There are concerns around, disruption coming from AI and what that will mean for labor force. I could go on and on and on, right? We've been wringing our hands. And I think many of these fears need to be quelled before you see people shift a lot more money into risk assets. So NVIDIA doing well and beating expectations is necessary, but not sufficient.
Have you gotten more bearish, Kate? I mean, I've noticed sort of a shift in your tone, and I was looking at your notes, and you like short duration, high quality fixed income, which doesn't exactly scream optimism about the future ahead. I mean, can you give us a sense in this very, very, very long 2 years that feels like 10 years, but is actually 2 months? I mean, how much have you actually gotten a little bit more pessimistic?
Well, I haven't gotten that much more pessimistic than I was kind of, over the course of the last year. I will tell you the short duration view in our fixed income outlook and how we're expressing our views in portfolios has been in place for the duration of the last 12 months. So that's been the case. We've been really kind of careful about adding to long duration fixed income, see lots of sort of headwinds. You might remember I added a bunch of gold over the course of the last year, which has turned out to be an amazing contributor to portfolio performance, obviously far exceeding any expectation that I had when I was using that as a ballast for equities. But we're still all in on equities. I should be very clear. And we continue to believe that we're going to have a significant amount of upside when it's being driven by earnings over the course of 2026. So I'm not bearish on equities. I'm still cautious on taking risk and duration, or what shouldn't be risk, but feels like risk and duration, and instead of using gold in portfolios.
Kate, the way you talk about gold, it doesn't sound like a hedge. It sounds like you're excited about this as an investment. Would that be accurate?
Yeah, I mean, look, the first add to the portfolios was really about kind of hedging equity risk and sort of a substitute for duration. And then over the rest of the year, a lot of the other kind of structural issues that are underpinning gold ownership really reinforced our thesis. Things about central bank diversification, concerns around sort of peakier inflation than many people were expecting. And so I'd say there are multiple forces and drivers behind our gold allocation at this point. So yes, it's not just a hedge, it's not just a ballast, but we see a lot of reasons for people, especially asset allocators around the world, central banks, sovereign wealth funds, pension funds, and institutional investors to kind of continue to add to their portfolios and use gold and precious metals in general as a tool.
And a lot of that was fueled by concerns about geopolitics and also economic policy coming from this administration. You mentioned one of the fears that you hope investors maybe could start to quell, and you mentioned trade. But are we peak past trade concerns, given what we saw from the Supreme Court, now the administration weighing 10, 15%, and new investigations using 301 or 232s?
I wish we were, Annmarie, but I'm not sure. I think that tariffs and the threat of tariffs is a tool this administration likes to use with trade partners and allies. And I think they're going to continue to pursue these tariffs in many different forms. You heard the president say last night during the State of the Union that he was going to be looking for substitutes and to be substituting the revenue that wouldn't be coming from the IEEPA tariffs. I know you have Henrietta on later. She's one of my all-time favorite policy analysts, and she's going to have great insights there. But I just want to make this point. I don't think tariffs and the threat of tariffs go away, even if the mechanisms look different. Maybe a little bit of relief on corporate margins in the near term. We certainly like that, although corporate margins have been in very good shape. But there's so many questions around refunds and what this means for small companies and in different parts of the supply chain that I think are still unanswered.
Henrietta is coming up next on the programme. Kate, get the dog back. We want to know the dog's name. What's the dog's name?
Her name is Cora. Her name is Cora, and I'm really impressed that she decided to make this appearance so early in the morning.
Can we get a price target or not? I'm joking.
On Cora?
I'm joking. Don't
Infinite.
take the dog out in the snow, OK? Don't do it. You'll lose her. Kate, thank you. Kate Moore of Citi Wealth there. Thank you very much. The snow is falling in New York City, I'm unhappy to say. I'm told we're going to get another inch or two here in the city.
I just saw less than an inch. You're making it now 2. You're trying to get the snow to fall. John, I understand
have no interest in the snow
you
falling.
like the snow and that you
think
enjoy
I want to
it.
get
You think
stuck
it's
here
pretty.
at the office?
I
Absolutely
think that you enjoy it, and I like to reject.
Apparently some people
Zero interest.
sleep at the office. That's interesting.
Sleeping at the office?
Yeah, that's an interesting
What do they do?
one.
Get like a sleeping bag and go under the desk?
Yeah, on a cot or
No,
something.
no.
I'll make hot cocoa.
I could never. I love you guys, but absolutely not. Equity futures on the S&P, positive by 0.25% with an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahara with more. Hey, Yahara.
Hi, John. The Pentagon issuing an ultimatum to Anthropic, threatening to use a Cold War-era law to force the company to let the U.S. military use its AI tools. Anthropic wants guardrails preventing its Claude system from autonomously targeting enemies or conducting mass surveillance. Pentagon officials laying out a series of consequences if Anthropic doesn't comply by Friday. Warner Bros. Discovery says a new $31 a share buyout offer from Paramount Skydance could lead to a better deal than its existing agreement with Netflix. In a statement, Warner says it's not withdrawing its recommendation that investors support the Netflix bid. It says the sweetened Paramount offer does, however, meet the threshold for further talks. And Aston Martin is cutting jobs. The British luxury car maker says it's cutting up to 20% of its staff, which is about 3,000 workers. The company is saying its turnaround efforts have been derailed by product delays, problems with quality, higher tariffs in the U.S., as well as a slowdown in China. That's your Bloomberg Brief. John.
The auto business is so tough right now. It's unbelievable. Yahara, thank you. Thanks for that. Next on the programme, the roaring economy.
The roaring economy is roaring like never before. The Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years. We are doing really well.
Up next, we'll catch up with Henrietta Treyz of Veda Partners, live from New York City this morning. Good morning. Big earnings day coming up with NVIDIA at the centre of things. NVIDIA coming up after the close. You'll hear from Salesforce as well. In the next 20 minutes or so, you'll also hear from TJX, so look out for that this hour. In the equity market at the moment, we're positive by 0.26% on the S&P 500. On the Nasdaq, up by 0.3. The Russell up by 0.6. Under surveillance this morning, the roaring economy.
The roaring economy is roaring like never before. One of the primary reasons for our country's stunning economic turnaround, the biggest in history, where the Dow Jones broke 50,000 4 years ahead of schedule, and the S&P hit 7,000, where it wasn't supposed to do it for many years. were tariffs. We are doing really well.
I really want the equity market schedule, if the president can share that with us. It's the latest this morning. The president taking ownership of the U.S. economy while delivering the longest State of the Union address in history. The president setting the tone for midterm elections, with Democrats holding a 4-point edge in congressional polling. Bloomberg's Tyler Kendall has more. Morning, Tyler.
Hey, John, good morning. Well, domestic issues really remained front and center during President Trump's State of the Union address last night in a bid to convince Americans that the economy is in better shape than polling suggests voters feel it is. And we really saw the president do this by touting policies that have already been enacted, including the tax cuts under the One Big Beautiful Bill. As it becomes apparent, this White House is banking on larger refunds and more cash in consumers' pockets ahead of the midterm elections. The president also notably really doubled down on his tariff policies, threatening additional tariffs against any trading partner that revokes its current deal struck with the U.S., and even going on to say that he was disappointed with those Supreme Court justices that were sitting front and center in the chamber last night. As you well know, this administration wasted no time instituting that new 10% broad-based tariff under different authorities just yesterday morning. The thing is, we didn't get a lot of new policy proposals as the White House plays defense on affordability, though the president did float a potential plan that could help workers without employer-backed retirement savings accounts. So perhaps we'll get some more details there. But instead, the president really called on members of Congress to codify some of those proposals that we've already heard before, including when it comes to a potential ban on institutional investors from buying single-family homes. Worth noting that some of these proposals don't have the full support of Republicans in Congress, though there is a new report out this morning that members of the House Financial Services Committee will be traveling to the Treasury Department later this morning to discuss that potential plan with the Treasury Secretary. John, as you well know, domestic issues were really the focus for senior White House aides for President Trump to stay on message. But foreign policy, of course, made its way into the conversation on the heels of the administration briefing the so-called Gang of Eight top intelligence lawmakers on Capitol Hill yesterday when it comes to U.S. and Iran. In his speech, the president did not rule out the potential that we could still see military action.
Tyler Kendall down in Washington. Tyler, thank you. On trade, it felt like the president had gone a little bit soft with the Supreme Court. Now, everything's relative, of course, on the Trump scale. Friday was an 11, and yesterday was what, like a 5?
I mean, even think less. I was expecting a lot more when it comes to trade. The Supreme Court justices were right in front of him. He came in, he shook everyone's hand that attended, starting with Chief Justice John Roberts, all the way down the line. And he said it was unfortunate, but it wasn't the language we saw on Friday, so he definitely was toned down.
Looking forward to the conversation about an hour from now with Ambassador Jamieson Greer of USTR. Look out for that a little bit later this morning, right here on Bloomberg Surveillance. Henrietta Treyz of Veda Partners has this to say. This was a victory lap speech, and for those inclined to hear good news, it was likely very effective. For others, it would likely be a stark contrast to their lived experience. Henrietta joins us now for more. Henrietta, welcome to the programme. The president called it a roaring economy, and roaring like never before. How many people are buying into that?
Whatever the opposite of 64% is out of 100. I mean, the president's agenda on the economy is his least popular metric, and it's driven largely by these tariffs. And it's amazing to watch the administration and the president double and triple down on something that the American public just does not like. What really stood out to me is the idea of replacing the income tax with the tariffs. The income taxes bring in like $3 trillion a year, and the tariffs bring in $300 billion, maybe annualized over 12 months. So in that, if that's going to really come together, we have a lot more tariffs coming our way. That's a scary thought.
Henrietta, when it comes to the tariff story, it sounded like the president he talked about how he wasn't going to punt this to Congress. He has other legal avenues. Is that your takeaway as well? When the 150 days are up for the 122s, it'll all be done through Section 232s and 301s?
Yeah, absolutely. I mean, that's just acknowledging that he doesn't have the votes. The House and the Senate have both voted about a half a dozen times to strip the president of these tariffs, not to put them back in. There's one senator that I can think of from Ohio who supports extending these tariffs, but Leader Thune and Speaker Johnson have both been really clear that they just don't have the votes to extend this. So the president is right to talk about how he does not need Congress. To Kate's point, and I petitioned to have a field trip out to her house, all of us go next time. But her point, the 301s and the 232s can ratchet up tariffs from here. I think we're stuck at 10% for now, mostly because the EU deal, the UK deal, Japan, South Korea all depend on the rate being below 15%, which his announcement on Saturday morning would have violated. But after November 3rd, all bets are off. Then we don't have any more midterm elections. These tariffs can ratchet back up. But I think between now and November 3rd, we're set at 10%.
Well, hopefully we get some clarity from Ambassador Greer. But were you surprised yesterday that we didn't get new policy prescriptions? Nothing really in terms of housing that the president was supposed to outline in Davos, and then it was punted to the State of the Union. Didn't hear about tariff dividends, didn't hear about more potential checks going out to Americans. Was this surprising to you?
Yeah, usually the State of the Union has at least one big, policy agenda rollout, especially this early in a president's term. He's got 3 years to get legislation passed or to announce new programs, and we got none of that. It was obviously a very political speech, just in terms of the theater of it all, which plays really well, I think. But there were no policy fixes. There's no, affordability narrative that we can take with us and say, oh, this is how we're going to fix housing, or this is how we're going to bring electricity prices down. None of that was there.
Henrietta, one thing that AMH noted earlier this morning that I thought was really astute is that China was not mentioned once, that there were no mentions of the second biggest economy in the world, even though that had been such a big dominant force of a lot of the trade agenda, at least in Trump's first term. How much do you see that as something that gives hints at what policy and what discussions could look like going forward?
It really speaks to how much the president is intent on having these in-person meetings with President Xi. He really wants to go to Beijing. He really wants to have 3 more meetings thereafter for the rest of this year. The migration of this White House away from being, China is our number one adversary, 145% tariffs. Fast forward to China actually retaliating and restricting critical minerals and magnets and rare earths really created a whole about-face within the administration, driven by the president himself. And you can see there's some warring factions within the White House over how aggressively to challenge China. You see it in the AI chips debate and the semiconductor chips debate that plays out on Capitol Hill as well. But the president has plainly decided that he wants a personal interaction with President Xi, and that's going to take precedent.
How effective have the chip restrictions, actually been with regards to China?
I mean, there's new reporting out that y'all are leading right now, just talking about the chips that China is getting as we speak, and where those came from and how they were able to get over to China. I mean, I think that the members and the folks at the State Department and the Pentagon that are most concerned about the détente that we just described are concerned about what they're seeing in the chip production that's happening in China, the replication that they're seeing, which goes back to the original Section 301 investigation into China in the first place in Trump's first term around forced tech transfer, intellectual property theft, all the same stuff. And now it's escalating.
Henrietta, appreciate your time, as always. Henrietta Treyz there, of Veda Partners, weighing in. Thank you. A lot of that technology is getting into the country.
Oh, it is. And OpenAI and Anthropic have also come out and talked about how China is basically using their inputs and algorithm. OpenAI sent a letter to the China Select Committee saying how DeepSeek is free riding off of their technology. And then you also have this report, of course, that to make DeepSeek, they were using these chips that they're not supposed to have their hands on.
NVIDIA reporting after the closing bell. Look out for that earnings report later on this afternoon. Full coverage from the team on Bloomberg TV and on Bloomberg Radio. Equities at the moment positive by 1/3% on the S&P. Coming up, we'll catch up with Dutta of Renmac as the president pushes for rate cuts. Plus, Tchir is going to drop by. She's got some morning movers. Check out Carver. Shares are climbing after posting an optimistic outlook. That name is up 11% in the pre-market and up double digits so far this month. There is a turnaround in select names in the restaurant business, and they have been beaten up big time over the past year or so. What's happening with discretionary spending in this country? That name is up next. From New York City, you're watching Bloomberg TV. Let's give a snapshot of the equity market at the moment. Positive by about 1/3% on the S&P, up by 0.4 on the Nasdaq. The main event for the Nasdaq, of course, later on this afternoon after the closing bell. Numbers from the tech giant NVIDIA. Our performance at the moment on the Russell, small caps higher by 0.6% with some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Kava getting it done in what's been a tough fast casual environment as rivals like Chipotle struggle to convince shoppers, convince diners that that they're worth the premium over fast food promotions. Cava posting better than expected growth for the last quarter and projecting more of it this year. It says customers are visiting less, but when they do, they are spending more. So shares are up more than 10% in the pre-market. Meanwhile, Lowe's offering another reminder that the housing market isn't rebounding anytime soon, despite the president's affordability push, which we heard about last night, with Americans growing more frustrated with the housing market's rates still too high, homes are too expensive, so people aren't moving and they aren't taking on those big projects. And that showed up in Lowe's results. The company posted a weaker than expected full year sales outlook, so shares are down 3.6%. And I don't think I've ever watched a workday earnings report this closely, but here we are. The stock had been beaten down 40% year to date, heading into the report on fears AI could disrupt enterprise software demand. And the softer outlook it gave is only adding fuel to the fire. We are seeing workday shares down nearly 10% in the pre-market. And in the next test of software amid these AI threats, we will get Salesforce earnings, and heading into that report after the bell, shares are down 0.6%. John?
Yahira, thank you. That's a key earnings report later on this afternoon. Software has been absolutely hammered over the past few months, and more particularly over the past few weeks. Got some numbers just a moment ago from TJX. The numbers okay for the fourth quarter. We'll get to the outlook in just a moment. The stock is down by 0.4% for the fourth quarter. Comp sales coming in at plus 5%. The estimate 3.67, Bramo.
Yeah, and looking to that full year outlook, which is really perhaps what people are responding to, $4.93 to $5.02. The estimate had been higher than that at $5.18, which could be part of the disappointment. Very curious to hear any commentary. Earnings per share also coming in light versus expectations at 97 cents to 99 cents versus the $1.02. So is this a margin compression story? Is this shoppers not coming in the door? The actual sales numbers came in above expectations. So look at margin compression. Look at how they're absorbing some of those costs in order to lure in different customers.
Every time I see this stat, I'm shocked. 18 years of gains for that stock, up 27% last year, up every year for 18 years, including this year, if we stay the course.
You know, I'm old enough to remember Lohman's and some of the other names that you could go to and get different discounts that are sort of high-end names that you could dig through. And one after the other went bankrupt, and TJX remained the one that consolidated shares. So now there's a question of how much is this almost the benchmark name when it comes to consumers that are looking for deals? Yes, like myself, who are going to different places and hoping for, you know, something that gives them that quality and value that everybody sees.
For the best part of 2 decades, the very definition of up and to the right, that chart. On our radar this morning, President Donald Trump calling the Supreme Court's recent ruling on tariffs, quote, very unfortunate. The president doubling down on his trade agenda, pledging to use alternative legal authorities to impose new duties. Elsewhere, the Pentagon threatening Cold War-era laws to force Anthropic to hand over unrestricted AI access. The startup pushing back, citing concerns over autonomous targeting and mass surveillance ahead of a Friday deadline. And finally, UBS strategists warning private credit defaults could skyrocket to 15% in its worst-case scenario. The firm's grimmer outlook coming as concerns over AI-driven market disruption are deepening shares of private credit firms taking a beating year to date.
It seems like at this point, people are just throwing out numbers as we get increasingly dire forecasts for just how much disruption there could potentially be. The fact that Matt Mish and the team over at UBS went to 15% in terms of the default rates among private credit from 13%. I just wonder what are the inputs to some of these models. At this point, it seems like people are increasingly worried that there could be entire business models that are eradicated. On one side, you have people saying, what took you so long? We've been talking about this for 3 years. On the other hand, people are saying, these are the companies that are going to use this first and actually be the beneficiaries of it. And so that's the debate right now, and it's playing out clearly in the analyst community.
When it comes to the private market, what's going on there with Jamie Dimon really kicking a lot of this off, saying some people are doing dumb things? You've seen under the individuals come out a little bit more constructive. Dan Loeb was speaking in Miami yesterday, and he said the bad news is that a lot of these loans will be impaired, but they don't make up all of the portfolio that they're invested in. There's not a run-on-the-bank scenario because there's a match between assets and liabilities. So that is a little bit more constructive view of what's going on, even though potentially Jamie Dimon is right. Some people are making some dumb
A
decisions.
thought-provoking note from the team over at UBS. Thanks for that. Let's stick with the economy. President Trump continuing his call for lower interest rates as many Americans struggle with affordability.
In 12 months, my administration has driven core inflation down to the lowest level in more than 5 years. Mortgage rates are the lowest in 4 years and falling fast. And low interest rates will solve the Biden-created housing problem well, at the same time protecting the values of those people who already own a house.
Joining us now to discuss is Neil Dutta of Renmark. Neil, welcome to the show. I should say this up front. I've seen Neil's medical records. He does not have Trump derangement syndrome. So before we start this conversation, I just want to park that. Neil, let's get into it. He's calling it a golden age, a roaring economy. What's your assessment of what this is at the moment?
Well, I'm right. I mean, he's sort of doing his best Jay-Z impression. We're going from lukewarm to hot. But unfortunately, that's not the case. I mean, if you look at private domestic demand for the full year last year, it ran 2.5%. Respectable, no doubt. It's a solid performance. But I think it's short of a golden age of economic growth. In fact, private demand, you strip out trade and inventory investment and government, it's actually a little bit slower than it was in 2024. So, you know, the golden age, you can't rule it out, but it's still very much a forecast, not a present-day reality.
Well, let's talk about the forecast, Neil. And you've heard this all before, I know, because we talk about it so many times on programmes like this. Tax refunds are coming. That's starting. We've already had the rate cuts. And these big tech companies are spending tons and tons of money on this economy at the moment. Neil, that's the bullish outlook. Sure. Any of those pillars at the moment you'd push back against?
No, I mean, well, I guess the issue is that there's a lot of optimism and enthusiasm in the economy for the reasons you mentioned, right? I mean, the lagged effects of lower rates, tax refunds, loose financial market conditions. You know, now is the time for the economy to be, you know, really accelerating. And there's not much evidence that that's actually happening. I mean, you look at the PMIs, for example, like business conditions indicators through February released by S&P. That's basically consistent with 2% real GDP. Again, not terrible, but, you know, not the kind of golden age that they're talking about. And, you know, that's important because it's this golden age that they want everyone to believe in to kind of justify the lower interest rates, you know, through, you know, the disinflation. And, you know, we're just not seeing that. So, yeah, I mean, I think what's interesting is despite all the things you mentioned, right? Refunds, optimism, you know, AI CapEx, we're sitting here with the 10-year longer term interest rate basically at a little over 4%. It's actually been coming down despite all these things. So isn't now the time for yields to be going up because of all that enthusiasm? It's not exactly happening.
Well, there could be this pushback about AI and what that does in terms of disinflation. I am curious, Neil, getting your take on the economic transformation that President Trump is discussing, the idea of increasing tariffs and eradicating or at least significantly diminishing income tax. Do you think that that kind of model is one that the U.S. should aspire to, that actually could set the economy up for a roaring number of years ahead?
No, I mean, it's just really a rotation of things. I mean, you want to cut income taxes and raise consumption taxes. I mean, so you'll probably get a little bit less consumption and a little bit more labor. I mean, I don't know that it's going to set the course for the golden age. I mean, I think there are things they've done that have been helpful for boosting potential growth, like, for example, deregulation and so forth. I mean, of the financial sector. I mean, that's probably, you know, helping underlying economic conditions. On the other hand, if you're trying to onshore activity in many cases, that's going to be in sort of a higher cost jurisdiction with, you know, higher labor costs. That's probably not the best thing for productivity. So it's a give and a take, in my opinion.
You talked about how you'd expect in such a booming economy the 10-year yield to be higher, or at least increasing as a representation of longer-term higher growth forecasts. A lot of people say the reason why it's not is because artificial intelligence is a disinflationary force, and you're getting that increased productivity, which is also the reason why you have seen kind of sluggish job creation. Do you buy that argument?
No. I mean, I think that, well, so it's, I mean, part of it is I'm cautious on the economic outlook, but let's talk about where things are. I mean, for all the talk about like AI displacement, look at prime age employment rates. I mean, they're basically at close to highs. I mean, so where's all the displacement we're talking about here? We talk about disinflation. And again, I think there's good reasons to expect disinflation, but I don't really think that's a function of what's going on with AI. I mean, it's really hard to be worried about inflation when shelter prices continue to moderate. I don't think that has anything to do with AI. I think rental demand is cooling because the labor markets have generally are likely to continue slowing. I don't think it's really an AI story. And ultimately, like any productivity boom, right? I mean, there's a bit of this. If workers are becoming more productive, then companies should want those productive workers. Are we seeing that? So I don't know. I mean, I think in any productivity boom also, you'd expect to see real compensation growth accelerate. That's entirely the point. The point is for investment to raise household living standards and real compensation growth to go up. And during this alleged productivity boom, which is really just, in my view, statistical noise driven by a decline in the savings rate, pushing up GDP, you look at what's going on with real compensation over that period, it's basically flat. If you look at real incomes net of transfers over the last year, it's zero.
Neil, can we focus on housing for a moment? You say in your note that you do expect continued downward pressure on residential investment. There was a lot of hype that the president was going to come out with more policy prescriptions to what's going on in the housing market. All we had yesterday from him is a reiteration of his call on Congress to enact restrictions on institutional investor ownership of single-family homes. Do you think that'll help the housing market?
No, and in some ways it might hurt because that's been a source of demand for the builders themselves in a time when demand from traditional sources like first-time buyers has been waning. So no, I don't think it would be the best thing. Look, the residential investment outlook in terms of at least construction, that's just a mathematical thing, right? I mean, the fact is that housing starts are running below housing completions by, I think, roughly a little over 100,000 units. So long as starts are running below completions, housing units under construction will continue to go down. And that'll weigh on, construction put in place.
Now, just a final question on the Fed. I'm sure you've been following the communication over the past few days. Are the doves losing some fuel here?
Well, I mean, you saw Governor Waller kind of make a nod to the fact that if the next jobs number is stronger, he probably wouldn't support a rate cut. And yeah, I mean, I think what's going on is people are punting on any decisions really through the summer, right? So I wouldn't expect if they're cutting rates in the spring, that means something very bad has happened between now and then. So I think this is just an acknowledgement of really the data that's come in. But as I said earlier, right? I mean, you have tax refunds, financial conditions being loose. We're coming off a firmer core inflation number. We're coming off a better than expected jobs number, and all the bond market has to show for it is 10-year yields at 4.05%.
It's notable, isn't it, Neil? What's your final word on that? Yields down by 4%.
Well, I mean, to me, it suggests that a lot of that's already priced in, right? I mean, and sort of the optimism, like the threshold is very high. I mean, if all you're doing is basically 2% GDP and everyone's expecting some sort of gearing up of growth because of the refunds, in the back half of the year, you should be marking down your expectations at that point, because most of the research that I've seen shows that the tax refunds are essentially a one-time sort of jolt to growth that fades in the back half of the year. And, essentially the government goes from a tailwind to a headwind.
Neil, it's good to see you. Thank you, sir. Neil Dutta there of Renmac. In the bond market at the moment, look, bond market could be wrong, of course, but fixed income doesn't appear to be buying the economic boom. You'd expect high yields and steeper curves, and that story slowed down. I
remember when Mohamed El-Erian said to us, listen to what companies are telling us. And what you heard from Home Depot and what you heard from Lowe's is that things are not looking great and that people feel that uncertainty. Yes, this is tied to the housing market, but that's led to downgrades in some of their expectations. We heard the same thing from Walmart. In that backdrop, can you get really excited about some sort of reacceleration in growth that can be prolonged? This is the reason why yields have been coming in.
Bond yields this morning up by just a couple of basis points, 10s at 4.05%. With an update on stories worldwide with your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. We are seeing TJX shares up 0.5% in the pre-market. The company reporting fourth quarter earnings that beat analyst estimates, though its 2027 EPS forecast falling short of forecasts. TJX on track for its 18th straight years of gains. Look at that chart. Meanwhile, NVIDIA has yet to sell any of its H200 chips to China 2 months after President Donald Trump's decision to allow shipments of the AI processors. An administration official who helps enforce export controls says the U.S. is boosting efforts to crack down on smuggling of advanced semiconductors used in AI. And Stripe is considering an acquisition of all or parts of PayPal. Sources telling us here at Bloomberg the talks are in the early stages and no certainty they'll lead to a deal. PayPal was an early mover in digital payments, but has struggled with modernizing its technologies. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, staying the tariff course.
An unfortunate ruling from the United States Supreme Court. Almost all countries and corporations want to keep the deal that they already made. The legal power that I, as president, have to make a new deal could be far worse for them.
Up next, the Port of Los Angeles Executive Director, Gene Seroka from New York City. You're watching Bloomberg TV. Stocks are positive by 1/3% on the S&P and the Nasdaq, up by 0.4. Some nice outperformance on the small caps this morning. The Russell is high by 0.7. Under surveillance this morning, staying the tariff course.
An unfortunate ruling from the United States Supreme Court. Almost all countries and corporations want to keep the deal that they already made. The legal power that I, as president, have to make a new deal could be far worse for them. And therefore, they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement.
So here's the latest this morning. President Trump doubling down on his tariff agenda as questions remain following the Supreme Court's ruling. Gene Seroka, Executive Director of the Port of Los Angeles, saying importers are facing significant uncertainty. Gene joins us now for more. Gene, welcome back. Thanks for making some time for us. You're a master of international trade. How is that uncertainty following Friday's ruling impacting cargo rates at the moment, or will impact cargo rates in the months to come?
Good morning, John. And this conversation continues to be the same between the two of us. The uncertainty means that businesses hit the pause button. They're not hiring. Capital investment is softer than we would like. And trying to make decisions on sourcing and manufacturing continues to be the focus of scenario analysis. Now, we're coming out of the new Lunar New Year holiday, typically our slower season. So even if there's a quick uptick because the nominal tariff rate has decreased, I think the cargo will be able to be absorbed in that supply chain mechanism from ocean to rail to truck. What happens with ocean freight rates are largely a quotient of supply and demand. There's a little bit of downward pressure on rates right now due to uncertainty, but that's kind of in the short term according to the spot market itself.
Gene, without a doubt, we've increased friction. There's no dispute about that. But over the last 12 months, even with that increased friction, it didn't pull down the amount of trade volume that we saw on a global basis in the last 12 months. Do you see that changing this year?
I do, and it's looking one layer below, John. As you know, in Los Angeles, just as one barometer, we had our third busiest year ever, but there were a number of ups and downs, stops and starts based on trade policy statements that emanated from Washington. Now, as we look into some of the details, we've seen that exports are down 9 of the last 13 months, and U.S. exports to China of soybeans down 90% year over year. All that being said, with the information we have today, it's likely that our port's volume will decline by mid-single digits this year, save any real shocks to the system based on policy changes or the reaction from trading partners overseas.
But what has actually changed in terms of policy? They just basically filled the gap that IEEPA left with another section of 122.
Well, Annmarie, last Friday, when the Supreme Court came out with their announcement on the 6-3 vote rescinding the IEEPA tariffs, companies, especially on the import side, got to the mathematics. What does it mean for me, country, commodity specific? The Section 122 tariff implementation, which started yesterday at 12:01, is a little more prescriptive, is temporary in nature, and has numerous exemptions. So once again, companies go back to the drawing board to try to figure out what the impact it is to their cost structure and, in some cases, bottom line. There's also a wide sweeping conversation about the potential of refunds. 2/3 of the tariffs that were received thus far by U.S. Customs and Border Protection and ultimately the Treasury Department are under the IEEPA category. What happens to those? We've got companies lined up to test this, whether it be through an application process, legislation, or even litigation. And then the final question there is, what does it mean for the consumer? Lastly, all this cargo volume that could see ups and downs like we witnessed last year, maybe there's a window of opportunity here with the effective tariff rate down and known for the next 5 months alone. Maybe cargo shoots through the system a little bit quicker.
Gene, do you have a sense of where some of the cargo is coming from and how that has changed amid more uncertainty around tariffs?
Yeah, Lisa, the movement of cargo away from China to Southeast Asian nations is real, and we witness it every day. Overall, last year, again, using Los Angeles as one indicator, we saw China volume drop by about 4.5 percentage points, and cargo from Southeast Asian nations rose by more than 7%. The net was Southeast Asia overtook those losses from China. Now, as we heard in the 15th five-year plan from Chinese President Xi Jinping, not only will they be exporting products, but also manufacturing knowledge. There's a tremendous amount of investment that's going into other countries, Vietnam, Indonesia, Malaysia, to name a few, from China sources.
Gene, just a final question from us. How easy is it to cheat these tariffs? Seen a couple of stories in the last day or so. How easy is it to do that?
I think the staff at USCBP is doing a tremendous job looking at the 12-digit harmonized codes and trying to make sure everything matches up, from the product description itself on that bill of lading to the content that's in every product and each shipment that comes across. There's this notion that relay cargo or cargo that transits over other countries is simply trying to skirt the issue of tariffs. And while there are some bad actors, realistically, tiered suppliers ship into one central point, finished goods are made and shipped on to the United States. Continuing to watch for these bad actors and make sure that that activity is kept to a minimum, if any at all, is really the goal of the U.S. government.
Hey, Gene, it's good to see you, as always, sir. Thanks for making some time for us. Gene Seroka there, the Port of Los Angeles Executive Director, forecasting a little bit of softness relative to the record boom we saw in trade last year.
Yeah, but it's hard to tell right now because this is the soft period of time. Later in the year, they'll get a better sense, and maybe later in the year, we'll have a better sense. Later in the year, I'm talking 2 days, which is later in the year, at least the way this year is going.
I hope in about 35 minutes we'll get some clarity as well. Looking forward to the conversation just around the corner. In the next hour, we'll catch up with Peter Tchir of Academy Securities, Jay Goldberg of Seaport Global, and in about 35 minutes from now, the US Trade Representative Jamieson Greer. Looking forward to that conversation in just a moment. The third hour of Bloomberg Surveillance is just around the corner.
There are elements of disruption that are permeating the entire technology sector.
Diversification is your best friend.
There will be some defensive posturing in the market.
Investors are recognizing they can go into bonds. It is the counterbalance to risk.
Regime change looks a lot like a counter-trend rally at the start.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores, the price action looks like this. We're positive by 1/3% on the S&P 500, up by 0.4 on the NASDAQ, up by 0.6 on the Russell. The story in the bond market we'll talk about in the next 10 minutes or so. If there's an economic boom, why isn't this bond market buying it? Yields have been falling, and we're near the lows of the year. And typically you'd expect yields up and a steeper curve if you were having a much better outlook for the US economy. You'll tie the long end of the curve up by 2, 470 on 30s. Looking ahead to the day ahead, it is packed with earnings. We'll hear from Salesforce a little bit later after the closing bell. Nvidia, the main event for so many of you out there.
And there's actually a connection between these stories, the idea of what the bond market is saying and Nvidia's results. There is an existential fear that is permeated throughout all of markets that, yes, Nvidia is going to deliver incredible earnings, and yes, you are seeing AI take over in a lot of different sectors, but you're not seeing the labor market really reaccelerate, and that's been the overall fear. That said, if Nvidia comes out and shows how they are delivering and how much they're able to increase their margins, I mean, 76% margins is just mind-boggling in terms of the money they are minting. It might convince people to go back into these names.
I'm looking forward to NVIDIA because for a lot of individuals, top of mind is going to be China. And given the fact we didn't get a state of the relationship between Washington and Beijing last night from the President of the United States, who decided to not mention China directly, the first time since 2005. Last president who didn't do so was Bush. I think potentially this individual who's been noted as maybe a diplomat between these two countries will give us the outlook on what is actually going on in China. Are the H-200s going there? Is there appetite for that? What's going on with the administration in terms of export controls? Maybe we'll get some clarity this afternoon.
Nvidia in the pre-market higher by 0.75%. We're looking for some clarity in about 28 minutes from now. Ambassador Jamieson Greer of USTR joining the program to break down just where tariffs stand. There is some confusion at the moment. 10% on Friday. 15% on social media, back to 10% on Monday.
I guess it depends what you were paying attention to, the president's truth or what the Customs Border Protection put out. What the Customs Border Protection put out is 10%. The administration saying we're working on getting to the president's truth of 15%. Okay, but when? We need some clarity.
Let's get you set up for the next hour or so. Peter Tchir of Academy Securities joins us following the president's State of the Union address. Jay Goldberg of Seaport Global with Wall Street bracing for Nvidia earnings. And the US Trade Representative Jamieson Greer joins us on the White House tariff push. We begin this hour with stocks edging higher as investors digest the president's address last night. Peter Tchir of Academy writing the following: I was pleasantly surprised. He seemed nicer to other countries and didn't really threaten embargoes or really escalate tariffs. Pete joins us now for more. Now, Pete, that's a pretty low bar, buddy. Was that a big takeaway for you?
It was. It was kind of, one, I think the whole thing's a little bit ridiculous that neither side can, one side can't stand ever, the other applauds everything. But yeah, he was kind of nicer to other countries. As Annmarie just mentioned, he didn't actually talk about China. I was a little bit concerned we could see kind of the threats of embargoes or something else on tariffs. It seems like they're taking a pause. Maybe we'll hear a little bit more in half an hour when Greer comes on.
Looking forward to that conversation as well. 30 minutes away, 8:30 Eastern time. Pete, I see reasons for this economy to do better. I believe they've got time on their side. We're going to get the tax refunds. We've already had the rate cuts, and we're seeing a lot of spending coming from big tech players. But I respect the bond market just as much. And this bond market is not buying the boom. Yields are down near 4. The president's talking about a roaring economy. Do you see it in fixed income?
I don't see a roaring economy, though I do think there are two separate things going on. One is this administration is keen on getting 10s below 4%. I wouldn't bet against them, so I think that's happening. I still think we're going to see 3 rate cuts almost regardless of what the data comes. So I think that's playing a little bit in the bond market away from just the traditional analysis. Having said that, I'm concerned about jobs. I'm concerned about the uncertainty. And as we've lost some of this wealth effect, is this spending going to be there? Everyone I talk to, everywhere we look, I think there's just this hesitancy to spend, and that can be self-fulfilling. So I'm really nervous about the economy for the next few months. Not like that it's going to roll over, just that we don't ever really catch fire, and at some point that weighs on itself.
And that's the reason why the likes of TJX are saying the holiday season probably was the peak. And after that, you're going to see some deceleration in shopping. In other words, what you're saying is being borne out in some of the commentary from the earnings. I just wonder for the path forward, how much you see AI as part of this story. And I feel almost it feels cliched to talk about this. But do you really think that is the driver of the weakness that we're feeling in the labor market?
I still think it is to a large degree. When I'm looking at my portfolio, I still think we're going to see some margin compression from the companies that were very asset light, big tech companies. And it's not that they're going to lose to AI necessarily, but they're going to have to spend a little bit more possibly to defend their moats. Maybe they offer some price concessions. So I think you see some margin compression there. And I do like the heavy asset industries, right? I think anyone who's got a lot of people, a lot of plant, property, and equipment to move around, they're the beneficiaries of AI. So I think there's more room for this kind of rotation that started to run. It's not going to be every single day like it was for a while, but that's where we're moving. We're moving to this kind of production. What are we making? How do we get those things there more efficiently? That's the big beneficiary. And I think electricity production continues to grow.
I think it's important to note that there is at least more discussion in Washington, D.C. around this percolation of of AI and what that could mean for the labor market. Last night, President Trump talking about how the hyperscalers would pay for their energy use and the build out of a lot of their infrastructure. What did you make of that?
One, I think it's fairly smart. When I go anywhere and talk, if you see you're losing the audience, just mention the price of electricity and everyone is suddenly engaged. So the cost of electricity, brownouts, that risk, it's resonating with voters. So I think getting these things paid for, and it's not just the production of the electricity itself or the generation of the electricity, it's the grid to get it there. So I think there's going to have to be a lot of spending on that. I think that's going to probably be borne a little bit by the companies that are building out this, the hyperscaler industry. So it's probably, again, more margin pressure there as you see them having to support that growth. I think it's great for the economy. I think it's great for Americans if we can get that electricity price under control, because right now that's been one of the highest rising factors in CPI for the last 3 years.
How would shareholders, you think, at these companies react to that? The president dictating they need to pay for consumers' electricity prices or subsidize it?
I think like a lot of things, they will attempt to, pay some lip service around it, figure out what they can do, what's within their power. And some of it's legitimate that they want this and need this themselves, right? Plugging into the consumer grid opens up all sorts of problems potentially for them. So I think it's actually a natural fit in some ways, right? You already saw some of the companies want to open like 3 Mile Island nuclear facility. So I think the reality is when you look at the data center and AI, electricity is such a key component of their business. It makes sense for them to have some sort of vertical control over it. So I don't think it plays as bad maybe as some other things like saying we can't do 10% credit card charges.
Peter, I know we said that the president didn't mention China once, but he did mention Iran. You have a number of generals on your board. What's the thinking right now in terms of what the president will do? He had a clear red line last night, reiterated that they cannot get a nuclear weapon.
Yeah, I think that's what we're going to see. We're going to see, I guess they've been using the term we've been talking about, a couple of bloody nose attacks. So as things are in position, we're not sure that everything's still in position. We might still be a full week away from being truly in position to be able to attack and defend any retaliation, but we will see some attacks. They will have the minimum amount of risk possible to U.S. service people, and it would be meant to send a message to Iran. We're serious. We will escalate if necessary, but come to the table and let's sort this out. So we think that's going to occur there. It's going to occur within the coming week, and I do think we will be successful. But in any sort of military action, there is risk, and if we start losing service people, it could get sketchy very quickly.
Pete, what is success? Because arguably, we've already done what you just described. We've done it once already.
I think this time is actually getting them to the table and getting a deal, not this postponement, second, third, fourth, or fifth round. It's like, here's a piece of paper, let's sign this and let's move on. I think that's where we're at, and it has to be done within, we're guessing 2 to 3 weeks. If we don't get there within 2 to 3 weeks, that's when we see the real escalation.
Watch this space on Iran. Pete, just to turn to the earnings a little bit later, NVIDIA, Salesforce, earnings matter. But at the moment, Pete, earnings don't matter right now. It feels like this equity market is trading on something different, that we're going through a repricing associated with AI. JP Morgan and Goldman, others too, talking about so-called halo, heavy assets, low obsolescence. This came from Goldman recently. The markets are rewarding capacity, networks, infrastructure, engineering complexity, assets that are costly to replicate and less exposed to technological obsolescence. Pete, are we just going on a repricing, sector to sector, company to company, based on that? And a lot of the price action we're seeing is just divorced from traditional indicators.
One, I think so, though that sounds like a very long way for Goldman to say production for security, or PROSEC as we've been calling, because those have been the exact industries we think the U.S. government's going to support and capital is going to flow into. Yeah, I think for Salesforce, what we're looking to see is there any sign of slowdown? Do they have to spend more money to protect their moat, or are they comfortable? And I think that could really help the software side of things. NVIDIA, again, how many chips are they selling? How profitable is that? The news is going to be great out of NVIDIA. The question is it going to be great enough to kind of move things around? And personally, I am looking to see where they come with Intel, right? That's been one of the, possibilities for Intel is doing more with NVIDIA. Last time around at earnings and things like that, it didn't go well for Intel. Could that be a turning point for Intel? And again, that fits to me that definition of, production for security, where a company like NVIDIA kind of looks to do more with Intel.
Pete, you tell him. You were first. Peter Tchir of Academy. Pete, it's good to see you. Thank you, as always. Pete, Goldman, JP Morgan, all with that same version. Pete was very early.
I love it. He's saying, it's not Halo, it's PROSEC. Get with the program, get with my marketing. He's been doing this and trying to pitch us for quite a while, so kudos to you.
There's a big AI flavour to a lot of what we've seen recently, and it raises the question just how much earnings are going to matter. Earnings have been great. They've been really pretty good through the first quarter earnings season for Q4. What we've seen over the last few weeks has been pretty decent, I would say, and yet you're not seeing a rally at the index level. Why? Because we're trading on something else.
We're trading on hopes, beliefs, future projections, fiction in some cases, this idea of what is the future growth pattern, what is the future margins of industries that are going to be completely changed by technology. This is use your imagination season, and that's the reason why a lot of people are saying this is the strangest season they've ever seen in markets.
A lot of puzzles to figure out. Let's give you an update on stories elsewhere with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump delivering a record 1 hour and 47-minute State of the Union address last night. The speech was heavy on his economic policy, with the president touting falling food and gas prices. Trump didn't offer many new policy proposals, though he did promise a $1,000 retirement savings match for workers without 401ks. New documents revealing Jeffrey Epstein maintained deep ties with JPMorgan Chase years after the bank officially cut him loose. Records showing Epstein used one of his trusts to wire $150,000 to his girlfriend's brokerage account at the bank just 6 months before his death. And General Atlantic is said to be selling a stake in ByteDance that would value the company at $550 billion. Reuters reporting the potential sale would be the first since TikTok and ByteDance closed a deal to transfer part of their U.S. operations to American investors back in January. Neither company responded to requests for comment. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the programme, the morning calls. Plus, we'll catch up with Jay Goldberg of Seaport Global, with Wall Street bracing for NVIDIA earnings from New York City this morning. Good morning.
Overall, we expect another beat and raise, quite simply, from NVIDIA here. I mean, that really shouldn't be the surprise. That really should be the base case. If there's any sort of potential risk out there, it might be on the margin side. But nonetheless, I mean, the trajectory is still very good. We think they sustain a mid-70s gross margin there, on top of the elevated growth rates that you're going to see here.
That was Angelo Zino of CFRA going into the big earnings report after the closing bell. NVIDIA just around the corner. We'll have another preview for you in just a moment. The scores into the opening bell look like this. An hour and about 15 minutes away. That cash open is just around the corner. Futures are positive by 1/3% on the S&P, on the Nasdaq by 0.5. The Russell higher by 0.7. That's the price action. Let's get you some morning calls. First up, UBS upgrading IBM to neutral, calling its risk-reward ratio more balanced. That stock is doing better. Getting hammered earlier this week. Stock is up in the pre-market by about 1.7%. The next call from Evercore, downgrading work data in line, noting AI investments will limit operating leverage. That stock is down by more than 9% in the pre-market. And finally, Oppenheimer upgrading Oracle to outperform, believing it can be an AI winner. That name is up this morning by 2%. Let's stick with AI. The next test on deck with NVIDIA earnings after the closing bell. Jay Goldberg of Seaport Global remaining the sole sell on the stock, writing, "We think NVIDIA will meet expectations. It is hard to see them delivering much upside." Jay joins us now for more. Jay, welcome to the show. Still the big bear based on the recommendation. Let's get into it. What's going to cap the upside from here?
I think they're limited on capacity, right? We know that the industry is constrained across semiconductors. The big problem for NVIDIA is what the capacity they can get out of TSMC, both in manufacturing and packaging. And I think that sort of caps their upside until maybe later this year when we get a little bit more capacity out of TSMC.
Well, Jay, beyond next year, over the next several years, is this going to remain an issue? Is it something we can look through at the moment?
I think we're in a somewhat historic peak of capacity constraints right now for across semiconductors, right? Every sort of nook and cranny you look into in the industry, things we haven't thought about in years, like substrates and photoresist chemicals, everything is in shortage right now. And that's going to last. Some of those are going to last through the year. Memory looks like it's going to be constrained through the year. But semiconductors are cyclical, and eventually things will ease. Probably next year, but who knows when that's going to be.
Well, Jay, that's the big question, because you are the sole sell. There's 4 holds. There's 78 buys on this name. What are the 78 getting wrong?
I think that the difficulty NVIDIA has is it's gotten so big, and for it to keep momentum going, the deals that we're looking at getting these data centers built to the scale that is going to be sufficient for their numbers, that's going to be challenging, right? We're already sort of starting to see the stress on the capital market side. It's getting harder and harder to fund these data centers, and the data centers are just going to get bigger and bigger. And NVIDIA needs that to keep the numbers going. And so I think that it's just getting harder and harder for NVIDIA to sell.
How much of this, Jay, is also their competitive advantage is getting eaten into by some of the other players? I see you've got a buy on Broadcom, on Intel, and I just wonder how much you see a lot of not just hyperscalers, but other companies look for cheaper, more efficient alternatives as they plan to scale up.
Yeah, if we're looking at it over a multi-year time frame, the competition is definitely increasing. Right? Yesterday, we had a deal between AMD and Meta. There's lots of puts and takes on that deal, but the bottom line is it really firmly establishes AMD as a credible second source to NVIDIA. You mentioned all the hyperscalers. Google's doing very well with its TPUs. All the others are going to try their own hand at it this year as well. There's a lot of competition out there, and some of them are, they're going to get in. It's just going to take a little bit of time, but they're slowly eating it away at NVIDIA's moat.
Jay, is there anything that NVIDIA could say today after the bell in the New York Times that would change your mind and that would actually make you more bullish on a name at a time where there's $650 billion being spent on the build out for just 4 hyperscalers just this year alone?
I mean, I'm negative on NVIDIA's near-term prospects, right? I think they're a good company. They make great products. I've never doubted that. If they could somehow tell me that they've magically gotten a lot more capacity and they're going to greatly increase revenue next year, or later this year, those are the kinds of things I'm looking at. But there's lots of other things to offset that. I'm still worried about memory, the impact of memory prices on NVIDIA's margins. I think that's right. Memory's short everywhere. That's going to weigh on them. I'm also worried about their balance sheet. They're doing an awful lot to keep this AI trade going. And like everybody, sort of all the major players in this are starting to use their balance sheet and off-balance sheet metrics. I think that's, those concerns are out there too.
Jay, in October, we heard from Jensen Huang saying that the Rubin chips and the Blackwell chips are on track to generate $500 billion in revenue over the next several quarters, which was quicker than many had expected. Why is that not enough for you to potentially have a different look on where the stock is trading short term?
I think a lot of that's already reflected in numbers. I mean, my take all along this has been NVIDIA just can't outperform the broader sector. And I think we've seen that play out over the last 6 years. And I don't, 6 quarters, I don't see anything sort of changing that meaningfully in the next few quarters.
Jay, I want to talk about another name that you cover. I want to finish on Apple. Jay, it's really interesting that Apple is sitting out the massive capex spend that we see from the other tech giants. Now, the stock is kind of holding in there. It's not doing anything spectacular. But what is the bet that company is taking by choosing to sit out of this massive spending?
I think the gains of AI are going to accrue to those companies that know exactly what they're doing with it. The expense is so high, you want to be really targeted and very judicious in your spend. It's expensive to build these things. And I think Apple will eventually participate more fully. And for the moment, they're happy to pay to make use of other people's AI build out. And I think that works for now. They need a better AI strategy. I think they're in the process of finding it. But for the moment, they don't need to build their own data centers when they can use Google's.
What do you think full participation is going to look like?
I think we need some compelling use cases. We need Apple to come up with some interesting ways to actually make AI useful and interesting to people. I think that's what's really lacking right now in the AI space is sort of broad-based consumer applications. I think we're starting to see that in some of these weird little side projects like OpenClaw. But Apple needs to productize that in a big way. They don't quite have the capability to do that. I'm also not convinced they know exactly what that looks like.
They were criticised quite heavily, as you know, Jay, last year for not participating fully. And I wonder if this market's transitioning to a point where we might start rewarding Apple for not participating fully. Are we close to a moment like that?
It's mixed. I mean, we saw this last quarter when Facebook and Meta reported at the same day. Microsoft's numbers were not great. Meta's numbers were pretty good, and the stocks got, one went down a lot, the other went up a lot. I think investors do care now about how people are spending AI, and that's a big change from where we were a year ago. I think there's a lot more picking and choosing who's doing well with AI and who's not. And so I do think investors care about this a lot.
I know that you've been kind of bearish on the story as everybody else gets super hyped up about how AI is going to transform everything and that spending can be essentially infinite with infinite gains. I'm just wondering if this caution that you're seeing right now, as you see this sort of rolling ball of fear impact a number of different sectors, if you're getting more bullish overall about how this is going to be deployed and a rationalization of some of the new technology.
My take has always been that AI is very, very important and very powerful and has a lot of potential, but that it's going to take a few years at least for us to understand how to adopt it and what it's going to be used for. And so I think we don't fully understand where we're going to deploy AI in the broader economy. And as we learn that, there are going to be winners and losers. I don't think we're going to wipe out the entire software industry, but I do think there will be a change in share among players, and there'll be a lot of new entrants in a lot of new categories. And so I think we collectively are figuring that out now, and we're seeing that in the market. I don't think anyone has a really clear idea on that, but I do think we're finally starting to see signs of like real utility for AI that hasn't been apparent before.
Do you think that the disruption is going to be as aggressive as some projections have it? Matt Mish of UBS creating a lot of headlines this morning with his 15% possible worst case default rate in private credit tied to some of this disruption. Does that seem realistic to you?
I think the time span of the capital markets and the time span of technology adoption are in very different clock cycles, right? The technology is out there. It's going to come. It's going to be very quick by technology standards, but that's going to be very long by capital market standards. And John, I'm like you. I respect the bond markets a lot. There are clear problems with how some of these data center financings are getting done. It's getting very, very heavily financially engineered, and I think that's going to be a problem in the near term. If you taking off my Wall Street hat and putting on my technology tinfoil hat, I think there are incredible things coming out there for AI. It's not going to be quite on the sort of Wall Street timescale.
Jay, appreciate your time. Thank you, sir. Jay Goldberg there of Seaport with one eye very much on the bond market, even from the technology pro.
Yeah, I mean, look, this to me is really the key question, both the bond market from the government bond market and then the bond market when it comes to private credit and when it comes to high yield credit. You do start to see some concerns percolating in, mostly concentrated in private credit and BDCs and some of the public representations of that market. Nonetheless, very much wondering when there's going to be pushback from credit investors about some of these plans and exactly how they're going to be paid for.
The fate of this massive build out right now is in the hands of fixed income, as it often is. Coming up on the programme, we're going to catch up with this guy, an important conversation with the US Trade Representative Jamieson Greer on the White House tariff push. Looking forward to catching up with the ambassador in just a moment. Plus, Yahira is going to drop by with your morning movers. Lowe's sliding as profit guidance falls short. That name is down in the pre-market by 3%. Speaking of the bond market, yields higher just a little bit this morning. No drama. Higher by 2 basis points on 10s to just north of 4%. On 30s up by 2 to 4.70. And at the front end of the curve, as this Federal Reserve sets us up for a prolonged pause on interest rates, yields higher by 2 basis points, getting close to 3.50. From New York City, you're watching Bloomberg Surveillance. Live from New York City this morning. Good morning and welcome to the programme. The opening bell about 60 minutes away. Equity futures firmer by 1/3 of 1%. Outperformance on the small caps. The Russell this morning higher by 0.7. With your morning movers, Yahira has more. Hey, Yahira.
Hi, John. After Home Depot's lows giving us another reminder that the housing market is not rebounding anytime soon. Rates are still too high. Homes too expensive, so people are not moving and not taking on those big projects. So that showed up in Lowe's results. Shares are down 3%. Meanwhile, HP shares also falling in the pre-market, down 6% after warning profits will likely land in the lower end of its forecast. The company saying a demand for its PCs, AI PCs, held high, but that momentum not enough to counter sharply higher memory costs plus tariff headwinds. And we are also seeing Circle Internet shares soaring 18% now in the pre-market after the company behind the USDC stablecoin posted a big profit jump. And despite last year's crypto meltdown, demand for that dollar-pegged coin held up. John?
Yahira, thank you. Thanks for the update. Let's turn to tariffs. The big story, the president doubling down on his trade agenda.
An unfortunate ruling from the United States Supreme Court. Almost all countries and corporations want to keep the deal that they already made. The legal power that I, as president, have to make a new deal could be far worse for them.
The president pledging to use alternative legal authorities to impose new duties following the Supreme Court's ruling against the tariff agenda. I'm very pleased to say they're making some time for us this morning is the US Trade Representative Jamieson Greer. Ambassador Greer, welcome to the programme, sir. We need to spend some time with you talking about the next year, particularly the next 150 days. But there is some intrigue over the last week. Let's talk about the last week, and particularly on Friday. There is now a new baseline tariff of 10%. Why did we start with 10% when the president appears to want 15%?
So the authority that we're using right now, which is a temporary 150-day authority, that's 5 months, 150 days. And we have a lot of countries out there that for a long time have had 10%. We have some that have higher at 15%. And so our goal with all of this is to have continuity. So we want to have the 10%, and we're looking about how to implement the 15% that the president indicated, because we want to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools, because we want to keep going, maintain the policy. We'll just have a change in the legal implementing authority.
Ambassador, you're giving me the impression that this is still under conversation, negotiation, perhaps internally, when the president was pretty explicit over the weekend in his own words. I, as the president of the United States of America, will be effective immediately, raising the 10% worldwide tariff on countries, many of which have been ripping the US off for decades, without retribution, to the fully allowed and legally tested 15% level. How can we sort of explain that, which is rather explicit, with the more nuanced tone you're offering this morning?
So we'll put out a supplemental proclamation that the president will sign, going to 15% where appropriate. Remember, before the Supreme Court struck down the tariffs, a lot of these countries had agreed to have tariffs, U.S. tariffs on them of 18%, 19%, 20%. So going up to 15%, for them, at least temporarily, it's better than the deal that they had. And so the president wants to make sure, again, that we have continuity in this process, that folks who acknowledge they had giant trade surpluses with us, they had unfair trading practices affecting their trade, and who agreed to pay the tariff, that they actually are in a position to do it until we can get the more durable and long-lasting measures in place.
Ambassador Greer, when you say when appropriate, is that this week, or are you looking to do this after the 150 days runs out of the 10% level we currently have?
Oh, it'll be in coming days. It's soon, right? I mean, the president put out this direction, to your point, and so that all of that is in development. So that will be soon. Again, the idea is to establish a through line from the policy that the president has implemented successfully over the past year, and continue it over this 150 days, and as we build up appropriate tariff rates using other investigations and means.
So when you do raise the 122 tariff to 15%, what's your argument going to be to the Europeans? Because this is stacking on top of most favored nation rates. That means that for the Europeans that agreed on a 15%, the highest level they would agree to accept, this new rate for some products will be above 15%. What's going to be the argument to Brussels?
So I've been in constant contact with my counterparts in Brussels, the UK, and elsewhere. And the way to think about this is every country has domestic procedures that they need to go through to come into compliance with the deal. With Brussels, we gave them a good rate on cars. That stays the same. With the UK, we gave them a quota on cars. We gave them a quota of beef to import duty-free. That stays the same. So a lot of these parts stay the same. But just like Brussels hasn't fully implemented its deal, or the UK hasn't fully implemented its deal, we also need a couple months now to have some domestic procedures, because the Supreme Court struck down all of this. It's pretty normal when you have a trade deal to implement over time. Most trade deals take years to implement. We're on the fast track, and so we're just going to have a couple, 3 months to make sure that we rejigger the tariffs in a way that comply with our end of the deal, and we expect the EU and the UK to hold up their end of the bargain too.
But does this new 122 15% now basically break the EU trade agreement, given where most favored nation products are and those rates?
So right now, as we talked about, 10%'s in place. There will be a proclamation raising it to 15% where appropriate. And so once that comes out, I'm happy to come back on and explain how that might accommodate other countries where there's a deal.
Will any of the rates on any country stay at 10%?
Well, we want to make through that we go through the legal process and we get out a proclamation. Again, this is anytime we put on a tariff, we're going to have foreign interests who want to bring it down. So people are going to sue us. So I'm not going to get ahead of the president. I'm not going to get ahead of the White House counsel and all these folks who are implementing this. So when that comes out, it'll be very clear what and how and why.
Ambassador, in some of your comments, it seems like you're suggesting that the rate could go above 15%. And I just am curious what exactly you're planning to use. It's been discussed that Section 301 in particular will be used to go after places like China, which it has been used for before. Is that still in the cards?
Yes. So Section 301 is a country-specific tool, and it allows the president to investigate unfair trading practices by countries. And again, this is what we've been getting at over the past year. As we've concluded deals with over a dozen countries, they have agreed to eliminate unfair barriers to our trade, take down their tariffs, eliminate fake regulatory barriers, et cetera. And so we can actually conduct these investigations under Section 301 on a country-by-country basis, figure out exactly what they're doing that's been so problematic, and negotiate with those countries, but also impose a tariff as enforcement to make sure that they eliminate those practices. China certainly, but also other countries, Vietnam, Southeast Asia, the Europeans potentially. But the point is to recreate the policy that we've developed over the past year, to give continuity and be able to be in a position where we can honor the deals but also have enforcement available. That's the only reason why these countries have made all these concessions, because they know the president's willing to enforce and willing to raise tariffs if he needs to.
Have you started the 301 investigations?
So there are a couple that have already started. We opened a Section 301 investigation on Brazil a few months ago. We opened up one on China a few months ago about compliance with the Phase 1 deal. And we have many others that we are preparing right now and we expect to launch in the coming days and weeks, such as related to forced labor in supply chains, industrial excess capacity, or unfair trading practices with respect to fishing or seafood or rice, or subsidies for certain products and that kind of thing.
So, Ambassador, you were potentially planning to use 301 because when I spoke to you and your colleagues in the past, there was this concern the Supreme Court could strike down IEEPA. So why didn't you do these investigations from the very beginning?
IEEPA was the most appropriate tool to use because we are facing an emergency in this country. In the 5 years prior to President Trump's second term, our U.S. trade deficit exploded by 40% to reach $1.2 trillion, the largest trade deficit in human history. And the trade deficit was a manifestation of many things, but one of them is a lot of offshoring of production to other countries, jobs and manufacturing that went to China, Vietnam, Mexico, et cetera, to the point where our defense industrial base was challenged, our manufacturing base and jobs were hollowed out. And this was an emergency and is an emergency. And so the president used an emergency power to move very, very quickly. Section 301 and Section 232, some of our alternative tools, they take more time, they take more process, they're very effective, but they didn't have the flexibility and the speed we needed to really out the gate, make these points, get the deals with the countries, and now we can go back and make them firm.
Ambassador, Canada and Mexico, of course, will be dealt separately, but does the president feel constrained by USMCA?
So I wouldn't say feel constrained. We're in the middle of a review that we have to conduct in the United States. I'm in contact with my counterparts from both Mexico and Canada. There are things in USMCA that make sense that don't get a lot of news because they function fine. But there are a lot of things where we don't have the type of market access we want, whether it's in goods or services. We have Mexico that historically, over the past few years, has been discriminating against U.S. energy producers and service providers. We have Canada that limits our access for dairy, has taken American wine and spirits off its shelves. So we have a lot of issues like that. We also have concerns about transshipment through Canada and Mexico of goods from third countries coming through and benefiting from duty-free treatment from USMCA. And so we want to make sure that if there's an agreement with either of these countries, that it really benefits these countries and not third countries that might use Canada or Mexico as an export hub into the United States.
I'm sure you followed the story. Josh Wingrove and the team down in Bloomberg News in Washington, D.C., reporting more recently that the president is privately musing about exiting the North American Trade Pact. What can you share with us this morning about the prospect of that happening?
Well, it's not just privately. He talks about it publicly, too. It's not a secret. I don't think that's super newsy, to be honest. The president has been really clear this year that he's concerned with the performance of USMCA. He doesn't feel that we should just rubber stamp this agreement. I'm having separate negotiations with Canada and Mexico because our relationships with those countries are so different. And so I think we'll have over the coming year the conversations. Maybe we'll have separate protocols with Canada and Mexico that we tack on to USMCA. We just have to fix some of the gaps in that. The president has already taken action on autos, which is a big problem. We've seen a huge influx of imports of autos from Mexico over the past few years, when really we want to be making those things here. And we're already seeing Stellantis, GM, and others announce new lines and using up excess open capacity in the United States to make more cars here. So we're already seeing a good effect from the president's trade policies with respect to Canada and Mexico.
So it sounds like a review and improve is the path you're on, Ambassador Greer. When it comes to the 122s, are you prepared potentially for suits as well, using that legal authority?
Well, any legal authority the president uses to impose tariffs, foreign interests are going to sue, right? People who are importing from foreign companies and foreign workers, they're going to sue. So of course, we expect that comes along. However, I would say that the lower courts and even the Supreme Court expressed that 122 is an authority that the president can use. We put out the proclamation last week that lines out exactly how the president can use this and why he's using it and the declarations he's making. Are people going to sue? I expect they will. We feel confident in the case.
In July of last year, though, the president's own lawyers said that 122 wasn't applicable. They said, this is the appeal of the Court of International Trade decision, they said basically, nor does it have any obvious application here, 122, where the concerns the president identified in declaring an emergency arise from trade deficits, which are conceptually distinct from balance of payment deficits. So why do you think it works now when it didn't work over the summer?
So I will say, first of all, that I think that there's more context to that statement. And further, a balance of payments is not identical to a trade deficit. People have kind of set up this straw man. That's just wrong. If people go back and actually read the proclamation that went out, it talks about the actual balance of payments deficit. It refers to the current account. Now, the trade deficit is a big portion of the current account, so it certainly is a driver of it. But we also talk about things like our net investment income position, where we're $26 trillion in the hole. So there are a variety of things that contribute to a balance of payments deficit. And so folks who are out there with this kind of oversimple, straw man argument that we're just equating a trade deficit to a balance of payments deficit, they're just wrong. They don't even understand. I don't think they've read the proclamation.
Ambassador, can we finish on the trade deficit? Widened recently. And just to wrap up the conversation, help explain to us what the metric for success is actually going to be for the administration to demonstrate to the American public that this effort is actually working.
Sure. So when the president put his trade program into place starting in April, every month from April through December 2025, the trade deficit goods went down year on year. That's exactly what happened. So from April to December, the trade deficit in goods went down by 17%, 17%. When we look at, is the trade policy working? We're looking at the direction, the trend in the trade deficit, so that's going the right way. We're looking at real wages. Are they going up? Are people being paid more to produce here? And they are. We have average weekly earnings are up 4.4% over the year. And we're looking at what's happening with manufacturing. And we're seeing a lot more purchases of capital goods. We're seeing starts on factories. And so that's going the right direction. We're seeing productivity in manufacturing surging. So all of that's going the right direction. And we're seeing things like, GE has announced, another $3 billion worth of investment, 1,000 jobs across 5 states, Georgia, Tennessee, et cetera. So we're seeing it in the data, and we're seeing it in the actual expansion of manufacturing in America.
Ambassador, I know you've got to run. Thanks for making some time for us. Look forward to catching up again soon. Thank you, sir. Thank you very much. The US Trade Representative Jamieson Greer on metrics for success after that trade deficit was much wider than expected at the previous read.
Yeah, so far it isn't necessarily the trade deficit. It's things like wages. It's things like what kind of plants are agreed upon in terms of new investments to the United States. And he pointed to those, saying that they're expecting to remain in place. Still a lot of uncertainty, though, going forward about exactly how some of these trade deals are going to get executed.
And in the coming days, says it's going to be 15%. And this is where the consternation is over in Europe and the European Union. In the UK, they already have a 10% deal. So they're saying 15% is actually worse than we negotiated last summer. And then for the European Union, the fact of the matter is, for some certain products, having a 15%, 122, stacks on top of already most favored nation product. And they said they will not ratify the deal if that's the case. So this is why this man potentially is getting very frustrated, is going to be on a lot of calls with his counterparts. Yeah, it's confusing.
Yeah, this gets messy. And it's going to take some time to figure out, and that work is happening in real time. Thanks to the Ambassador for making some time for us this morning. Equity futures on the S&P positive here by 0.3%. Equities higher going into the opening bell with an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. In his State of the Union address, President Donald Trump praising the operation in Venezuela that captured former President Nicolás Maduro. The president saying the U.S. has received more than 80 million barrels of oil from Venezuela in the last month. He also awarded the Congressional Medal of Honor to one of the helicopter pilots involved in the raid. The family of Nancy Guthrie is offering a reward of up to $1 million for information leading to her recovery 25 days after she was taken from her home. The family is also donating $500,000 to the National Center for Missing and Exploited Children, and Guthrie made a direct appeal to anyone who may have knowledge of the case to come forward. And Warner Bros. Discovery says a new $31 a share buyout offer from Paramount Skydance could lead to a better deal than its existing agreement with Netflix. In a statement, Warner says it's not withdrawing its recommendation that investors support the Netflix bid. It says the sweetened Paramount offer, however, does meet the threshold for further talks. That's your Bloomberg Brief. John?
Never-ending story. Yahara, thank you. How sick is everyone of that story? Just wrap it up.
Honestly, the more I see this story, the more I think, more money, more problems. I mean, at a certain point, they're just trying to up the cost, and then President Trump gets in the play.
I just hope it means more films.
Ellison, that's not likely.
Wasn't Ellison at the State of the Union last night?
David Ellison was a guest of Senator Lindsey Graham.
There you go.
Very interesting.
Very close to Republicans. We'll see how this turns out. Up next on the programme, we'll set you up for the day ahead. Plus, Bloomberg's Ed Ludlow previewing the main event this afternoon, NVIDIA earnings after the closing bell. Ed, up next.
We have a lot of countries out there that for a long time have had 10%. We have some that have higher at 15%. And so our goal with all of this is to have continuity. We want the countries, we want the companies, we want people to understand that what we were doing before, we're going to reconstruct with alternative tools.
So that was the US Trade Representative Jamieson Greer. Ambassador Greer doing his best to make this simple, but it's complex and it's difficult to communicate to people right now. A lot of people are confused after the ruling on Friday, where we are, where we're going, where we're going to be 12 months out.
And a lot of that, I mean, to be fair, is directly from the president, because it came at 10%, and then the next day we got a Truth Social at 15%. Then the order actually went into practice at 10%. And now we're trying to understand exactly what it is, what it's going to be, and how it's going to affect negotiations with countries around the world.
Make it a series of investigations. It was almost cleaner with AIPA in many ways, which is why they went in that direction.
Exactly. So now a question of the uncertainty weighing on potential employment, on potential business plans. And this is what economists are looking for.
The trading diary looks like this morning. Big day coming up. Later on today, lots of Fed speak. Barkin, Schmidt, Musalem after the market close. The big one. Results from NVIDIA. But keep an eye on this one too. Earnings from Salesforce. Tomorrow, another round of claims, plus Fed Governor Bowman testifying to the Senate, and US-Iran nuclear talks restarting in Geneva and going into the weekend. One more data point for you on Friday, PPI data. Let's turn back to that big story, the main event, earnings from the world's largest company. Bloomberg estimates projecting NVIDIA's free cash flow to surge to record highs. Ed Ludlow joined us now for more. Ed, looking forward to your coverage today, sir. What stands out for you?
Yeah, it's the ultimate sentiment lever for the AI trade, right, where the market goes into this and wants CEO Jensen Huang, with the words that he chooses, to project confidence. But actually, if you look at the forecasts for top-line growth, what the hope is for the guide for the current period, the fiscal first quarter, they've set themselves a really high bar, right? The data center business continues to grow. They've given quite advanced notice on the roadmap for next-generation high-performance compute systems, and they've not yet really tapped into China. So all of that stuff's on deck. But, you know, for all the numbers, I'm very happy to go through them always. It really does come down to what the main man says.
We don't have a ton of time to go through all the numbers, Ed, but I am just interested in one specific angle. The diplomat.
Yeah.
The diplomat, Jensen, and his ability to stay close to China and stay close to the US. How's that working out?
Yeah, so I mean, Nvidia's guided that nothing will show up in the fiscal fourth quarter from China, but he's continued in the interim to walk in front of cameras and talk about how important it is to do business in a market which dominates AI research and where a lot of the engineers are. We are an American company and we abide by American laws, and actually nothing's really changed in that, other than at CES at the very start of the year. He couldn't resist the urge to say, we'd given you this forecast that over 5 fiscal quarters, we'd hit $500 billion of sales for our current and next generation systems. But I think it could be bigger because China might come into play. He told Bloomberg's Ian King that pretty explicitly. And so in the interim, he's continued to do that, meet with people that are important both in China and the United States, but then formally say, here's our position. We're an American company and we'll do as we're told.
Ed, good luck today. Thank you, buddy. As always, Ed Ludlow of Bloomberg. He'll catch up with the team on Bloomberg Technology in about 2 hours from now. And then later on this afternoon, it's the main event. It's the earnings report from Jensen and the team.
So I've been trying to think through what the surprises could be. Number one surprise, big investment in Anthropic or withdrawing cash from OpenAI. Big question in that drama. Second question, not saying that they are. I mean, I'm just trying to make it spicy. I mean, let's talk about the drama that could happen after the bell. Second question, CapEx, right? How much are they planning on that? Third of all, how high are their constraints? This is something that we were hearing about earlier. And then 4, how much is attention going to be diverted to Salesforce? The idea that this actually could suck the oxygen out of the room, even though it's a much smaller beast, just because of all the drama around software.
I want Jensen Huang to answer questions about Blackwell and how much China potentially relied on Blackwell chips to train DeepSeek. And what are the conversations he's having right now regarding China and how much his technology is leaking to Beijing?
I remember that statement from a year ago. There were 2 words in it that just stood out for me. And I queried those words at the time. Export compliant. They said it was export compliant. How did they know?
Well, I don't think they knew in terms of if it was export compliant, if it was a Blackwell chip. Maybe they thought it was export compliant because they thought they were using a lesser version of an NVIDIA chip. But to be honest, I don't know, and I hope he can answer this. NVIDIA up in the pre-market, up by 0.9%. That story has stalled. That rally has stalled over the past 3 or 4 months. That's notable given the amount of spending we're seeing from elsewhere. Look out for the moves a little bit later on this afternoon. Coming up tomorrow, Full Reaction. We'll catch up with Ed Yardeni of Yardeni Research, Emily Rowland of John Hancock, the Lumen Technology CEO, Kate Johnson joined us, and John Bilter of JP Morgan Asset Management. Live from New York City this morning. Good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.